course, the exception of panelists up on stage, you can take it off for that. If you need to step out of the building or you need a quiet place for a phone call or you have any other questions, please see one of the board employees sitting right outside the door here at the desk. We are now going to begin our conference with welcoming remarks from the Chair of the Federal Reserve, Jerome Powell.
Good morning and welcome to the Federal Reserve Board. I'm sorry that I'm traveling today and could not be with you. Thank you to Vice Chair for Supervision, Mickey Bowman, for hosting this conference. Thank you also to all the board staff that made this event possible. Community banks play a vital role in the U.S. financial system because they have strong links to the people and businesses they serve and direct knowledge of local economic conditions. These close ties allow community bankers to better understand their customers and the ensuing products and services for those they serve. I saw this clearly when I led the board's Community and Regional Banks Subcommittee as a governor. I have also seen the critical role of community banks in the communities where I've lived, including as a community bank customer. Today's event is a helpful opportunity for Fed leaders to hear from community bankers and learn more about the issues you face. We're committed to understanding these issues, and we have long been committed to tailoring our supervisory practices as appropriate for community banks to reduce unnecessary burden, while still ensuring that community banks continue to operate in a safe and sound manner. Thank you so much for being here today to share your knowledge and experience, and thanks for being such a vital part of the communities that you serve.
Well, thank you to Chair Powell for opening our conference this morning. It's so wonderful to see all of you here in Washington, again with us, to discuss and celebrate community banking and to talk about what the future is going to look like. Good morning, Secretary. So it's a privilege for us to be here today and for me to be here with you at the Federal Reserve Board with so many of our nation's bank CEOs, community bank CEOs. I want to start by thanking our bankers for the essential work that you do every day, serving your communities, supporting small businesses and families, and keeping local economies strong and growing. Today's event provides us an opportunity to come together to discuss the future of community banking. This great nation hosts the largest and most efficient financial system in the world, efficient and effective financial system in the world, ensuring that capital flows to those who need it and can put it to productive use. I think of community banks as the foundation of our financial system. You are often the first call for small businesses seeking to grow, for families looking to buy homes, and for anyone seeking to achieve their financial goals. At a time of rapid technological change, a shifting regulatory landscape, and evolving consumer expectations, your work has never been more vital. It's also about telling the community bank story, not only the services that you provide and the impact that you have in your communities, but also the value of having strong, profitable, well-managed companies as the foundation of the banking system. There's a story to tell here, and we want to ensure that community banks tell it and that you create your own narrative. This conference today brings together more than 100 community bank CEOs in person and many more. Our panels include CEOs from across our diverse financial system. And I look forward to hearing directly from these leaders to share what they are seeing, emerging trends, economic shifts, and innovations that are shaping the financial system, including the impact of AI and fraud that will likely affect all of your businesses going forward. This conference also brings together a broader perspective, from our Treasury Secretary, Scott Bessent, to new technologies, with Paxos CEO Chad Cascarilla discussing new technologies, to private credit and the global outlook with Blackstone CEO Stephen Schwartzman. And we'll hear about consumer digital platforms from Robinhood CEO Vlad Tenev. These leaders will help us think more broadly about how economic and industry developments intersect with community banking. Another special guest joining us today is CNBC host Jim Cramer, who will moderate a panel of experienced community bank CEOs with a combined century of banking leadership. Today, we will showcase how community bankers have consistently adapted, innovated, and outperformed while staying true to their mission. These efforts don't necessarily make the headlines on the front page of the business section, but they should. And there's no one better to help elevate the community bank narrative and amplify the value community banks bring to America's economy than CNBC's Jim Cramer. Finally, we will host a traditional policy panel that features community bank CEOs discussing capital and liquidity regulation. This session will provide an opportunity for a thoughtful, candid discussion about how our regulatory frameworks affect your institutions and your ability to serve your communities. These conversations are essential to help shape our thinking and inform how we as regulators can ensure that our supervisory and our regulatory policies are effective, fair, and balanced. The goal and theme running through all of today's panels is clear. There is tremendous support from the public and the private sector for a strong, resilient, thriving community banking industry. Each of our sessions today reflects a shared belief in the importance of community banks to America's economic future. Thank you for being here with us today, both in person and virtually. So now I would like to thank our Treasury Secretary, Scott Bessent, for taking time from his busy schedule to join us here today to discuss community banking. And I'll invite you to share your insights with us now. So thank you, Mr. Secretary.
Good morning. It's an honor to be with you today. Unfortunately, the government is still shut down because members of the Senate refused to support the Clean Government Funding Bill, which was passed by the House weeks ago. Across the Trump administration, we are eager to get the government reopened so agencies can continue to work for the American people. Glad to see all of you were able to continue your work today. This morning, I wish to focus on how we can better serve the American people and the important role community banks play in that effort. To begin, I'd like to express my appreciation to Vice Chair Bowman for arranging this conference. She and I are committed to protecting the role of community banks in our financial system. This conference is a testament to that commitment. As you all know, better than most, regulation has gradually suffocated the banks that are closest to the men and women who work the jobs, pay the bills, and take out the loans that fuel growth in small-town America. Banks that not only know their customers by name, but also their financial hopes and dreams. In other words, banks like yours. To reverse course, earlier this year, I called for a fundamental reset of financial regulation. No longer will regulation serve to entrench big banks and empower Washington bureaucrats to the detriment of community banks and the clients they serve. President Trump and this administration have charted a new course for our economy, one that strengthens both the shop floor and the trading floor. This is what I call the era of parallel prosperity, where Main Street and Wall Street grow together. Who will turn this vision into reality? The men and women in this room. Community bankers are laying the foundation for America's golden age, one loan, one family, and one small business at a time. My job as Treasury Secretary is to make it easier for you to do your job. To that end, we have worked hard for the first 8 months of this administration to empower community banks to take back control of their own future. This morning, I will discuss why the Trump administration has sought to empower community banks, how we have done it, and where we will go from here. First, why? Community banks are essential to America's heartland. They provide the capital that binds small towns together. Community banks make the charitable contribution for the new playground. They make the loans for small businesses, farmers, and first-time homebuyers. They employ local leaders and teach financial literacy in our schools. Parallel prosperity, as I mentioned before, is the idea that Main Street and Wall Street can grow together, and community banks play an instrumental role in driving growth on the Main Street side of the ledger. To expand opportunities for all Americans, the banks that serve Main Street must have the same chance to succeed as the banks that serve Wall Street. But the post-crisis regulatory framework has instead become a threat to the community bank model. Since 2010, we've lost 3,600 community banks, a reduction of over 45%. Community bank share of bank assets have fallen from 23% to 15%. Their share of outstanding bank loans has fallen from 27% to 20%. Their share of outstanding bank CRE loans has fallen from 52% to 41%. This represents an acceleration of trends that predate the 2008 financial crisis. And in a disturbing new development, de novo chartering has dropped precipitously, averaging just 6 new banks per year since 2010. For comparison, in the years prior to 2008, there were 100+ new banks chartered each year. The post-crisis framework has left a trail of destruction in its wake by reinforcing the larger economic dynamics that have hollowed out the American heartland while enriching the money centers in coastal cities. To be clear, the financial crisis underscored the need for new regulations. The purpose of Dodd-Frank was to end too big to fail, but it ended up creating too small to succeed. These new regulations entrench the dominance of the largest banks by rewarding economies of scale and necessitating effective lobbying operations here in Washington. What followed was a community bank bottleneck that left America's hometowns reeling. President Trump and this administration have seen what the heavy hand of government has done to community banks and the families you all serve, and he has set out to fix it. Why? Because we know that the Main Street revival starts with a community bank comeback. How will we position community banks to succeed? Let's start with the early wins. Just days after President Trump was sworn into office, the administration began rolling back the regulatory excesses of the Biden years. The regulators ended the politicized use of reputation risk and supervision. They proposed to rescind an embarrassing, complicated 60,000-word Community Reinvestment Act rule, and they retracted a merger policy statement that was both bad policy and bad law. The previous administration pushed for rules and guidance that micromanaged corporate governance, entangled the bank regulators in climate risk management, unduly restricted brokered deposits, precluded responsible bank innovation in crypto and other blockchain technologies, and imposed arbitrary restrictions on incentive compensation. These Biden-era proposals were bad for banks, bad for business, and bad for America, especially Main Street. So President Trump slashed all of them. To restore the strength of community banks, the new administration has replaced this draconian agenda with a new, more constructive agenda. The FDIC, for example, has recommitted to tailoring by proposing to raise and index
All right, good morning, guys. Got this bank conference playing in the background. I have it muted right now. It's kind of pretty dry, so we'll go through some of these individual charts that are shaking and moving this morning. So we got airlines, Delta gapping up this morning and looking to press into the high side. DAL, a nice gap up, so that's causing strength across the board in pretty much all of your airlines. UAL, AAL pushing this morning, Jets ETF seeing some strength. So again, airlines are showing some considerable strength today. Interesting. Very interesting. Let's look at Boeing. Boeing slightly higher. But yeah, Delta really showing some considerable strength on the back of its earnings. So good to see. You also have a bit of cannabis momentum this morning. You got Aurora Cannabis gapping up. You got CGC looking pretty strong, pre-market pushing here, gap up. Looks like they want to maybe target this gap liquidity. That could happen today. So obviously I'm bullish cannabis, but cannabis stocks are looking pretty juicy. Pretty juicy. Let's look at Tilray. So Tilray standout performance. Investors are liking that. If I hear anything on this bank conference, I'll tune it in. See what else we got going on. Oh, we got Wolf Speed shaking and moving. Ticker Wolf pushing up here, a few dollars. Going through restructuring. Looking at GME. Nothing really to do there. What else we got going on? Discussed airlines. Ticker Path is seeing some momentum this morning. Breaking out to the high side for PATH. 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 Klarna. KLAR breaking out to the high side as well. LAC, Lithium Americas Corp, continuing to push here after it's gone through a nice 3 days of selling. Copper stocks continue to remain exceptionally firm here. FCCO, Freeport McMoran making a big move. Let's look at this NPWR. That's making a decent sized move today. MP Materials also making a decent sized move today. Trying to gap up here. MTD after it saw a big fall from grace. Boom. Pushing right back up. Mettler Toledo. Again, your lithium-based stocks are doing quite well. ALB. Let's see what's not performing, and then we'll go through some of those headlines. Yeah, so I was looking at race this morning, Ferrari. Good time to buy a Ferrari. Look at that gap down. Double-digit gap down on ticker race. Ferrari boys are under pressure this morning. Basically, investors are not liking their EV plans. Ferrari has been one of the car companies that was the last stronghold holding out, saying they're not going to do electric, and now they're doing electric. They are folding, and again, you can see investors not liking it. This is going to be a day trade opportunity on the long side. There is some support here. You got your volume shelf. You got a weekly EMA 113. I'm looking for a pierce of that. You know, you could get a bounce here, but I want to take it around this 410, 409 area. And I'll probably do some call options. Boom, boom, boom. All right, what else do we have going on? Ticker AZZ Inc. A little bit of a gap down there for AZZ. Just seeing what else we got worth mentioning. All right, that's pretty much that. Let me go to the most trades. This ANVS bio seeing quite a bit of volume in the pre-market. It's probably gonna rip to the upside off of the open. Anovis Bio announces results showing its butane tap's ability to attenuate inflammation and improve cellular health in Alzheimer patients, suggesting potential disease-modifying treatment. Whoa. So, ANVS announcing potentially a new treatment for Alzheimer's. That's why that's running. That's a pretty big announcement. We could actually have a bit of a trade there. Alzheimer treatment. So again, we got some of the World Community Bank speakers. You got Jim Cramer set to speak. You got the Secretary of Treasury Scott Bessent just finished. You got some key bankers. Powell, I think, is done. Got some more Fed talk throughout the day. But this ANVS is on watch. Alzheimer treatment. All right, let's see what else we got going on here. IONQ Delta, of course, we mentioned that already. That's seeing some considerable momentum. Path is seeing some decent buy side pressure. Wolf Speed, let's take a look at the news on Wolf. Uh,
When I went to see President Trump and more importantly, the deficit to GDP now has a 5 in front of it. So according to the CBO numbers, and we don't have the Treasury numbers yet, the deficit to GDP will have fallen from about 6.5%, which was the highest when we weren't at war or weren't in a recession in U.S. history, to 5.9%. When I went to see President Trump approximately 2 years ago to tell him that I'd like to come out from behind my desk and get involved with the campaign, not going to repeat many private conversations, but this.
all right, so basically, they're saying that the deficit to GDP is improving. Bunch of bogus, but obviously we'll watch that considerably. All right, let's keep scrolling through these headlines. See what else is shaking and moving. Just gonna go through some of these. Let's put the ES chart up here. so that we can see what is happening in the futures market with SPY. It is pushing to new all-time highs. I'm just going to scan through these headlines, guys, see if there's any other catalysts. There's a couple already that we've mentioned: ANVS, Ferrari race, potential opportunities. Airlines, we'll see how they settle out at the open. Still have that community bank conference going on in the background with couple key influential talkers. Mizuho raises outperformance on Elevance Health, ticker ELV. Let's see what that is doing this morning. Yeah, not a bad area. It's into some resistance. Probably going to get a pullback, attempt to create a right shoulder, and then a continuation move. JP Morgan maintains overweight in Cinemark Holding, ticker CNK. Usually JP Morgan does move stocks with their upgrades, downgrades, initiations. CNK right now, not seeing too much there. Yeah, so the big headline was Treasury Secretary Besson says deficit for fiscal year 25 ending September 30th will be slightly lower. Bullshit. You bullshitters. JP Morgan seeks to accelerate push into payment services in India. They should just partner with PayPal. Let's keep going through. Helen of Troy shares are trading lower after the company reported Q2 financial results and issued Q3 fiscal year adjusted EPS guidance below estimates. Let's look at that stock. HELE is the ticker. So this stock has been absolutely beaten to a pulp. A big gap down today on lower than expected guidance for HELE, Helen of Troy. PepsiCo says Hispanic cohort in the U.S. impacted by immigration crackdown. Okay, that's... Tilray brand shares are trading higher after the company reported better than expected Q1 financial results. Yep, we know that. Absolutely know that. Airship AI announces a 9.7 million registered offering for immediate exercise. Ooh, AISP dilution event. And what is this stock doing? Wow, I'm surprised it actually isn't gapping down here this morning. Interesting. We'll watch that carefully. Meta Ray-Ban target 10 million AI glasses by production of 2026. Let's look at Meta here, because Meta's been going through a lot of distribution here ahead of its big release. It's into a nice area for a long trade, not long Meta if you don't have exposure. OpenAI sore poses risks, blah blah blah. Pepsi CEO says we'll launch a new development from water brand Propel for GLP-1 consumers. Let's look at Pep here. A couple headlines regarding Pepsi. Stock is gapping up nicely. Yep. Paychex declares quarterly dividend. I'm just scanning through some more headlines here, seeing what is worth mentioning. Cognizant included in Forbes list for world's best employers of 2025. Okay, let's see what that is doing. Cognizant, what's the ticker? Just typing it in here. I guess there's no ticker. CTSH, into an interesting area down here. Got to get a 7 and 20 crossover. So if this dips into your 7-day, that's a buy. CTSH. Let's look at MRP, Melrose Properties. Capping up a little bit. Let's look at TEM, Tempest AI. Technologies raises 10.9 million seed round to modernize regulatory law with AI. Klarna and Google Cloud enter strategic partnerships to bring more creative and engaging shopping experiences to millions of Klarna users. Okay, so now I know why Klarna is seeing some strength in the pre-market here. Partnership with Google. Interesting. Should also watch Robinhood, guys, because Vlad Tenev, the CEO, is set to speak at this community bank conference. So put on watch as CEO. Vlad Tenev is set to speak at the conference. Seeing some really decent strength today, guys, in Webull. Ticker BULL had that really big bounce off of the lows. Big gap down yesterday, followed by a high volume reversal candle. Look at 164 million shares. That's insane. Insane, eh? Yeah, Webull pushing. Webull's pretty much negated that entire gap down from yesterday. It's up nicely in the pre-market. This could see some momentum. You do have some weakness in some of these leaders, like WDC this morning under a little bit of pressure. Micron under a touch of pressure. AMD still an absolute beast right now. BABA showing a little bit of distribution as well. Alibaba's seeing some net sell side pressure. Nvidia is still ripping here, guys. Figma and Google Cloud team up to empower next generation of creative builders. Let's look at Figma, FIG. Yeah, so Figma's had a nice move off of the lows. Still has momentum, could still press. Delta Airline eyes strong year-end fueling airline sector gains. Shares of Delta are trading higher into Thursday open, taking the airline sector higher in tandem as the carrier third quarter results coupled with an upbeat outlook for the remainder of the year underscored Delta's success in navigating a turbulent start to the year. For the full year, Delta now expects profits to be at the higher end of its previous range, setting a goal of $6 per share versus the range of $5.25 to $6.25. This beats estimates consensus of $5.78. So all airlines are seeing a considerable push here in the pre-market. Saying NOK, November 21st, 550 call. Unusual volume chart looks hot. Yeah, it's a huge momentum chart. Absolute beast. Yeah, it could still run. Weekly chart still has momentum. Getting a little bit overbought. I would say it needs a tiny pullback on the daily, but it's probably going to get gobbled up very quickly. But it's still got a ton of momentum. I mean, yeah, this looks like it's going to be trying to test these high pivots very soon. Yeah, I can see why they're putting in the 550s because that's pretty much at these highs here. Yeah, nice little confluence zone. Volume has still been increasing. I guess you did get a bit of consolidation into your final 2 hours yesterday. Gapping up yet again, showing how strong it is. Yeah, it's looking pretty good still. Looking pretty good. Not a bad chart at all. All right, you're seeing some nice momentum from Serve Robotics. SERV, seeing a nice amount of liquidity in the pre-market, decent amount of volume. Okay, so DoorDash partners with Serve Robotics to bring Serve's delivery robots to DoorDash platform. The multi-year strategic partnership to roll out autonomous robot deliveries across Bloomberg. So that is the headline. So Serve and DoorDash partnership. Seeing quite a bit of strength there from Serve in the pre-market. We'll take a look at DoorDash. Yeah, so Serve could absolutely run as well. Higher short interest name. What is the market cap heading into this? So Serve, 823 million market cap. This thing could run. Run. Holy moly. I mean, I'm just eyeing up that big gap fill. See where this takes us. So I think we could probably head to 16 bucks today on Serve, guys. We should keep that one on watch for a long. Pure momentum. Let's look at Dash here because that's the partnership. So are they both getting sympathy moves? Let's find out. Yeah, Dash has had a strong chart as well. Also getting a sympathy move. Pushing to the high side here. This has also got some. I wouldn't short Dash here. That was an old short level. That was an old short level for that, but Dash is looking pretty strong. So keep Serve on watch partnership for a long. This is pure momentum and a nice partnership with DoorDash. I'd love to know a little bit more details. Yeah, you can see it already hit that 16, high side 16, mid 16 level. That's crazy. Interesting. So it's already blasted through that trend line, which means it could test there again. It could definitely test there again. They're discussing crypto in this bank conference. Let's just look at it. BTC catching a really nice wick, going from red to. Let's look at Ethereum. Ethereum is still under a bit of pressure, showing a nasty divergence. Again, we still have Robinhood CEO set to speak, Vlad Tenev, at this conference. Right now, Robinhood is still extremely elevated, down slightly. Interesting to see Webull absolutely ripping. Bless me. Excuse me, guys. But Webull's pretty much negated that whole entire gap down move. One of the stronger stocks in the market today. Looking pretty good. So keep Serve on watch because that's very interesting to me. We got this ticker TELO yet again, ripping telomere pharmaceuticals. Seeing some nice volume in the pre-market, really sizable volume. This is another one that can run. And I'm thinking it wants to retest that daily 200, but smashing above that EMA, you clear this high pivot here and this thing could run. Really, really run. BDRX, so quite a few pharmaceutical stocks still showing these massive, massive moves. BDRX is another one gapping up this morning. My gosh, look at these. BJDX, Blue Jay Diagnostics Inc. I don't even know what the heck they do. BJDX. Let's just see what the news is. Blue Jay Diagnostics shares are trading higher after the company announced it's entered into an agreement to amend the master service agreement and the master supply agreement with Sanyo Psycho. I really don't know much about it, but it is pumping this morning. Over 50 million shares already in the pre-market. That's crazy. 126%. Filthy beast. BAOS. also seeing some gap up. Let's look at this TTRX. That's seeing some huge momentum this morning. TTRX. I guess there's nothing really to do there. TCRT, we're just looking at some of these most traders here. A lot of biotechs. CDT equity, that's gapping down again, a bit of a penny stock. I'm not really going to touch that one. Let's see. That's also a penny stock. Tesla seeing some sell side pressure this morning. Decent amount of volume. So far gapping down just a little bit this morning. So Tesla continues to go through distribution. Ever since it made its high spike off of its inventory numbers, it's just been kind of choppy and sloppy under quite a bit of pressure. Underneath your 7-day sandwich between the 20. I think you can buy this bottoming tail retrace if you were to sweep it. I would be more inclined to try to take a stab around 421, so another $10 fall. ADAP seeing quite a bit of momentum this morning. Another penny stock gapping up, looking like it wants to head to that gap window there. So ADAP, let me see what the news is on ADAP. Adaptimmune Therapeutics. Really seeing too much. Not really seeing why. It's just maybe it's just a pure technical breakout out of that bull flag. A lot of volume already traded. A ton of volume. And you do have semiconductors slightly negative, guys, today. Slightly negative across the board, but you still have strength in NVIDIA and AMD. So you got to watch those two again. Plug Power, yet again, seeing another gap down move. Quite interesting. Oklo still doing well. Med Materials still doing well. Archer Aviation under a little bit of sell side pressure. Let's look at Joby because they obviously took a pretty hard fall yesterday on the back of their shelf offering. Just trying to see a bit of positive price. Let's look at some of these healthcare names. Novo Nordisk still chopping and slopping here. Let's look at UNH. UNH breaking out of that bull flag pattern. Still continuing to push here. Looking very strong. So again, a couple things to note. Let's just go through the quick commodity market and currency markets. Your US dollar continuing to push here, trying to break out. It has triggered that beautiful bullish pattern off of the lows. Looking like it wants to break through this EMA 113. Last time we tapped that, we got slapped down pretty hard. I'm expecting it to eat through that EMA pretty easily this go around. Your next real resistance lies around 99.40-ish, 99.50. Continuing to watch crude oil off of these lows. It went through a bit of choppy, sloppy price action. It is up about 1% today, showing a little bit of positive structure. You're seeing a little bit of an inverse head and shoulders building on the hourly chart. Very close to triggering here intraday on crude. Again, you should continue to watch those energy stocks as they will be on watch for some momentum if this breaks out. You have the Wasadi port next at sometime in the morning, a little bit later in the morning, couple hours. Natural gas inventories are set to take place today at 10:30 Eastern Standard Time. Nat gas right now is seeing a bit of a bounce from yesterday's big sell-off, still holding that 7-day high pivot, still looking structurally A-OK. I would still love to see a massive high pivot spike through your weekly 200. You can see that weekly 200 was tapped yesterday and it got slammed right back down. So that should still act as pretty decent resistance, but I'd love to see a pop on the nat gas inventories for a bit of a shorting opportunity. If we look at what is transpiring right now in the yield and bond market, right now you have bonds getting sold into just a little bit as the 2-year yield is quietly trying to make a little bit of a push higher here. You also have the 10-year yield trying to make a little bit of a push higher here. Gold, silver still acting well. Bitcoin has turned positive. We do have a big 30-year auction a little bit later that we need to be aware of. So keep your eye on that. All right, so Apple's negative in the pre-market, Microsoft negative in the pre-market, Amazon negative in the pre-market, IWM negative, Nvidia ripping, Meta slightly green. So a little bit of weakness in your consumer discretionary through Tesla and Amazon, and then your Russell 2000 is seeing a bit of sell side distribution. Okay. So as always, again, I'll be watching the S&P 500 here. As usual, we're gapping up into another new all-time high on the S&P 500, guys. So that is still continuing to show unwavering strength in the markets. I still got this background community bank meeting going on. They're just blabbing about really nothing. I want to hear what Robinhood CEO says and then Jim Cramer, because those are kind of your bigger public figures. They're taking a bit of a break now, so until the market opens. Interesting. They're taking a break, I think, until 9:45. So all these big bankers are wanting to see what the market does here on the open. But SPY pushing, I would only really short SPY into this parallel channel. You know, that's where we could head to today. Market's still looking a-okay, like it wants to head higher. Still a strong tape, very, very strong. But my top focus today, guys, is going long RACE, Ferrari. That's a big gap down for ticker race. I have some key levels a little bit lower, but I'm looking at some call options on the long side. I do like this SERV, serve. Good morning, Sarp. Nice job on your Delta or your airline plays. Airlines are gapping up. Yep, UAL boom. Nice job done. Serve. So I'm looking at playing long serve partnership with Dash. That is a positive catalyst. So I do think that pullbacks can be bought in this name today for a potential move back to that high pivot around 1641. So between the two longs on the table, serve and race, those are kind of my top watches. And then obviously based off of pure momentum, marijuana stocks, considering I'm already long, again, I would maybe look at a couple other plays other than CGC. You got some really good chart pattern in Aurora building. You got Tilray still building. So positive earnings announcements are popping up these stocks. Tilray is breaking out of that daily chart bull flag. We'll see if it can hold, but it could absolutely run quite a bit more. I mean, you have a little bit of resistance on the weekly chart sitting around 206 for Tilray. So maybe that this upside is slightly limited for Tilray. But keep marijuana on your watch because they have a lot of momentum today. All right, I'm gonna go split screen. I'm gonna grab some more coffee and then we'll keep those tickers on watch. Let's flip to the S&P 500 chart here. I'll put that 10-minute chart on there. Actually, we'll keep the S&P on the right side here, and then I will watch ticker RACE, R-A-C-E, Ferrari. Let's make some money. Let's make enough money on these call options to buy a Ferrari. That's the goal today on the trade. I'd have to lever my whole portfolio. Good morning, Peter. Good morning. You can grab some quick coffee, guys. I'll be back in a minute. So again, race is gapping down. I like 410 to 409 area on ticker RACE. We'll obviously watch airlines. Got to watch those semis today. You are seeing ASTS coming in just a little bit here. Crude oil trying to spike a little bit to the high side. So ASTS still showing a bit of sell side distribution. All right. I can mute that other meeting because they are not set to talk there. Here we go, ladies and gents. It's our open here. Let me put up race again. SPY, you can see a nice gap up on your S&P 500. It still could go higher. Look at that big fall on Ferrari coming in. Ferrari's under pressure. Look at XLE, guys. XLE is ripping here, guys. I'm looking at taking some profits on my call options from yesterday. Beautiful mover on XLE, guys. Those are in the money. I'm going to take a trim here, guys. On 89.50 calls, guys. If you're wanting to take a trim, now's the time. Oof, oof, oof. That's crazy volatility. XLE ripped. Ripped, ripped, ripped. Ferrari, I'm still waiting on Ferrari, guys. SPY still pushing. Come on, tighten up that spread. SPY's pushing to the high of that channel. It's getting into an aggressive short area potential. Canopy growth still ripping. Stocks are still acting A-OK. Still waiting on ticker race, but look at XLE, guys. That is pumping. I'm waiting for that spread to narrow. That's a big move. 89.50 calls are in the money. I like to see that. XLE is breaking out here. Look at that move. SPY ripping, XLE ripping, AMD ripping. SPY's into a shortable area. I got an exit there on half of my XLE at 64 cents. I trimmed half of my XLE calls from yesterday. Beautiful profit. Just under 100%. Still riding some more. Beautiful to see. That's a beast. That is a beast, guys. Marijuana still acting okay. Archer down. Nvidia still acting well. Plugs down 6. AMD still up half. Webull still up 1.8. Ethereum still struggling, guys. PayPal still seeing some strength. Look at those XLE calls are printing. Printing machines. Look at that move. Holy moly. Look at XOM. That is also in full beast mode, guys. XLE calls from yesterday absolutely printed. From 36 cents to first trim at 64 cents. You can even get a higher trim now. This is all happening. Beast mode. I'm looking at taking a little bit of profits on my member trade with XOM as well. SPY reversing right off that high channel. That was a beautiful shortable level. I never took a fill. I was taking profits on XOM or on XLE. That spread on XOM is still too big. I want it to narrow up here. Come on, XOM. All right, AMD reversing, guys. That's starting to go a bit negative here. Still waiting on ticker race. Race never hit my technical level, but it's acting well. You have Canopy Growth still showing some structure, but SPY coming in hard here. S&P coming in hard. XLE still acting quite well, breaking out. Intel's gone negative. Airlines are still acting well. Let's look at the serve here. SREV or SERV. Hood is now struggling, guys. Hood going negative. US Dixie is trying to make a move here, guys. All right, serve is into an interesting area. If you're wanting to take serve on the long side, this is kind of an area that you can go long on serve. I might take some upside kind of lotto call options to revisit the highs. The only problem is the market is seeing a little bit of sell side pressure. But serve has positive momentum. Damn, look at serve ripping, guys. Take it a stab at serve. 1550 calls for tomorrow. High risk, size down. High risk, size down. 1550 calls on serve at 55 cents. Still waiting on race. ASTS trying to firm up. Come on, serve. See if we can push this name back to the high side. 1550 calls for tomorrow. I got in at 55 cents. Come on, Serve. They've got partnership with DoorDash, robotics and autonomous. You've got a decent size potential hourly chart bullish pattern that wants to break out. It's very risky. It's aggressive. S&P 500 still acting quite well. Your IWM hanging in there. QQQ. Tesla still under pressure. Google, Apple down. Nvidia still strong. Microsoft, Amazon negative. All right, Serve is trying to push here, guys. Serve is trying to push. I would look for a trim on Serve at around 16 bucks, guys, is my first TP. Come on, Serve is trying. Serve is trying. Come on, Serve. $16 is TP1, guys, on Serve. Come on. Serve is trying. Here we go. Here we go. Big push on Serve, guys. Come on, hit 16 bucks. Hit it. Get that impulse candle. Did make a new high of day. That's very positive. Okay, we discussed Serve in the pre-market. Come on, Serve. TP1 is 16 bucks, guys. Here we go. Here we go. Come on. 15-cent spread right now. There it is, guys. Beautiful. All right, I trimmed half at 90 cents, guys. Half of my Serve at 90 cents. Beautiful. It's a nice just over 60% gain there on Serve. All right, my next trim, guys, on Serve. I'm going to flip to that hourly chart just so you can see it. I want to see it retest pre-market high at 1640. I'll look to exit. Serve is a beast right now, and I'm going to keep a break-even stop loss at 55 cents. So we just took our first trim, just over 60% profit. I'm going to manage a break-even. That was a quick trade. XLE is still absolutely trying to rip here. Beautiful. A couple profits here in the morning session. I like it a lot. I like it. Canopy growth still trying to hold steady here. DraftKings seeing some strength. Ferrari still trying. Quantum names are acting well. Baba under some pressure today. Lululemon acting well. Duolingo seeing some sell side. Nvidia still up 1.42. Come on, Serve. Here we go. Serve is starting to rip here. Come on. Again, this is my next trim target, guys, is that pre-market high. Come on. Ticker race still seeing some considerable strength. Come on. That is still full beast mode. Come on, Serve. Keep going, Serve. Keep going. Keep her going. Let's look at XOM. XOM 115 still looking to press a little bit. Crude oil has softened up just a touch, though. Robinhood under some pressure this morning. S&P still coming in just a little bit. Trimming half of my XOM calls. Trimmed half of my XOM calls for just over 60% gain members. The 115 calls are in the money, trimmed half. Moving stop to break even. All right, Serve is coming into TP2 there, guys. All right, guys, I am going to exit all of my Serve calls here. I'm going to exit all of my serve calls at $1.15, guys. I'm all out of serve. All out of serve. Beautiful. TP2, that's your pre-market high. Wow. Boom. Just over 100% on those serve calls, guys. I'm all out. Look at that S&P rolling heavy here, guys. S&P is rolling heavy. All right, I'm thinking about also taking more profits on my XLE because the market is getting super duper heavy here. Just going to move capital a little bit more defensively here as we are seeing the S&P rolling. What's crude oil do? Crude oil, wow, look at this dollar, guys. The Dixie's absolutely flying right now. Flying to the high side. All right, I'm going to close all my XLE 8950s here, guys. I'm closing all of my XLEs just because I still have exposure to XOM and that Dixie's just ripping. Ripping. So the Russell here. That's crazy, guys. IWM starting to come in. SPY looking pretty heavy here. Still trying to see if I can get an entry into RAC, Race Ferrari. It's still off of my level. It still could come in. That was a rush, but that dollar, guys, is flying. That dollar is flying. So nice gains this morning. Wow, all within the first 15 minutes, guys. That was insane. That was insane. DraftKings still having a solid day. Pepsi doing well. IONQ back to the negative side. Micron seeing some sell side. BABA down 2.7. Snapchat's gone negative. PayPal still green. Ethereum down 3.5%. Starbucks still seeing net distribution. Bitcoin down 0.5%. Megacap Techland. Tesla is getting absolutely clobbered here, guys. Look at Tessie falling downtown here, guys. Look at that S&P 500 getting smoked. And why your Dixie is just in full absolute bullish mode here, guys. That is filthy. Your QQQ is underperforming. That dollar chart is strong. Let's look at Serve again. Serve still acting well, but I'm all out, guys. I would look for a retest dip buying opportunity. But wow, that's crazy. Up 19.1%. Nice trade if you caught that with us, guys. Stunning little day trade long there. Webull still holding technical structure. I'm still interested in taking a stab on the long side of Ferrari, guys, but it just needs to come a bit lower. It's still off of my level. I like it around 410. S&P 500 still getting ridiculously heavy here. That's crazy. Crazy, crazy, crazy. AMD still slightly negative. All right, the community bank meeting is resuming here yet again. They are set to speak shortly. Webull still acting well. XLE still holding steady, guys. So right now, from a sector standpoint, you have XOY consumer discretionary, so Tesla, Amazon under a lot of pressure. Look at gold right now. Gold getting absolutely clobbered. Let's look at silver. Silver also getting clobbered here intraday. Silver still up a couple percent. Wow, silver did take out those all-time highs. What a blow-off move in silver. That's a shortable move, guys, on silver. That's crazy. I didn't even realize that. Communications still down 0.4. That's also seeing some considerable weakness. Retail stocks are under some pressure as well. Energy still holding up quite well. But that dollar chart is starting to rip here, guys. And that's looking very, very bearish on the S&P 500 here. We could be going We could easily fall down to 668 today, guys, just with how the strength in the dollar is. And then if you get the accompaniment of the dollar or the oil breaking out of the Wasati port later today, that would be very, very bearish. But so far, again, we're in a nice, comfortable position here with already taken profits on some of the day trades and swing trades. Look at serve, guys. Anyone still in serve, you are printing. Holy moly. That is crazy. Look at that squeezer. Oh, man. I wish I was still holding, but I made my money on it. I'm happy. I am very happy. All right, so Tesla down 2, Meta down 0.6, Google down 0.94, Apple down 0.84, Amazon getting wrecked down 1.17. Your QQQ and IWM are underperforming right now. Crude oil at 0.7, nat gas up 0.34, gold taking on the chin down 0.5%, hard selling. Nvidia still up 2.24%. JP Morgan's green, Lily's green, Netflix green, Ethereum under pressure, SMH under pressure, Carvana seeing some sell side liquidity. Interesting. You still have quite a bit of stocks green across the board. Some of those value plays that have been beaten down still have strength across uranium stocks right now. Biotechs are still acting quite well. Let's look at XBI here quickly. Plug Power, still Intel's now gone negative. You got your 10 and 2, your yield still trying to scream to the high side. Look at biotechs, guys. They are still ripping. SILJ probably going to go negative. Canopy growth, marijuana stocks are still holding quite steady here. Let's look at CGC. CGC still looks like it's got some upside momentum. Let's look at Tilray, TLRY. Energy getting slightly faded here. Tilray still looking pretty decent. Crypto computing stocks are acting well. Wow, look at Nvidia. Imagine this. Imagine if Nvidia wasn't selling, where this S&P and Qs would be. They would be getting hit pretty hard, but Nvidia is just in full absolute bull mode, capturing all that sell side liquidity. People are just piling into the world's largest company. New all-time highs, 194. I don't even know what the market cap is on Nvidia right now, but it is getting crazy big. Just big. AMD still green. Ripping. Energy stocks taking a bit of a breather here. Let's see if Intel's a short right now. Intel could be an interesting short idea intraday, guys. It tried breaking out on your 10-minute chart. It's seeing a pretty hard reversal. It is negative right now. Let's look at Intel, INTC. So Intel's still seeing a little bit of sell side pressure. Google's still struggling, Apple's still struggling, Microsoft, all mega caps are red except for Nvidia. Your Dow component's still green, 10 and 2, your yield's still acting well, gold bouncing nicely as the dollar is softening. Serve going through a bit of distribution, still holding technical strength. Webull still is very strong, guys. BULL showing great signs of life here. I think you're seeing a lot of people selling Robinhood here. Vlad Tenev is set to speak shortly at the Community Bank Federal Reserve meeting. So we'll see what happens there. AMD still acting very, very well. Interesting. Wow, look at how strong Nvidia is though today, guys. Nvidia is just the bright spot in the market that is holding the backdrop of this market positive. I mean, wow, look at that. What is the market cap on Nvidia now? 4.71 trillion. They're pushing for 5 trill, guys. It's crazy to think how quickly Nvidia blasted through the 2, the 3, the 4, and now approaching the 5 trillion market cap. I mean, to think how long companies were stuck under 2 trillion and then we breached the 3 trillion. I mean, it's just mind-blowing. You're seeing quite a bit of distribution today in China stocks. Alibaba getting smoked. Baidu today getting absolutely smoked. Interesting. Let's look at Yang. There's probably a fading opportunity at some point on Nvidia. I'd be shocked if they tried to keep Nvidia this strong throughout the whole session. I mean, it's risky shorting it, but simultaneously you're probably going to get a big sell candle. S&P is probably going to break lower here, guys. I'm going to look for a short entry on Nvidia. I'm going to take some Nvidia put options. If we get a retest of this little 10-minute topping tail, look at SPY. SPY absolutely getting smashed here, guys. Smashed. Wow. Canopy Growth marijuana stock still extremely strong. All right, what do we got here for Nvidia? I'm thinking about 192 puts, 192.50s actually for tomorrow. Again, I might get my head ripped off, but Nvidia is coming into that upside target that I have. Let's see if we can get any sort of a dip here on Nvidia. It's just a ripper. Wow, Nvidia is a behemoth here. Probably should stay away from it, but I'm going to take it. I mean, it's getting crazy extended here. All right, Nvidia just hit my upside 195 target, guys. I'm going to take a small stab, half position, 192.50 puts on Nvidia. High risk. I repeat, this is high risk. Half position. Look at that S&P drilling, guys. Holy moly. That is just crazy. Everyone is just piling into an Nvidia while the rest of the market falls. Intel under pressure. That's also looking like another short. Are they going to keep Nvidia up alone today? If Nvidia turns here, guys, this market is going to collapse. This market is going to collapse if Nvidia turns here. They're keeping the selling kind of muted. There's so much selling happening under the hood of this market right now through your mega caps. And if Nvidia turns around here, this market's going to get wrecked. I'm telling you, we're going to get wrecked in the S&P and Qs right now. You got to watch Nvidia, because if that starts to fumble, we're going to look real nasty here in the market. We are going to look real nasty, guys. Come on down a little bit. SPY's still acting super duper heavy. Look at SPY. So SPY's into a pretty big level here, back testing that original M top neckline. Here we go. Here we go, guys. Nvidia's starting to fall here. It is gonna hurt. AMD's still a beast mode. AMD's still holding steady, guys. Here we go. Come on, Nvidia. Dump us. Dump us. Dump us. Here we go. Here we go. SPY getting heavy. Nvidia getting heavier. Come on. Imagine they take Nvidia negative, guys. Where would SPY be? Where would the Qs be? We are falling. Dixie's still acting well. IWM down 0.4. Qs are only down 0.25%. SPY only down 0.2%. Crude still green. Nat gas still green. Gold still slightly negative. Dollar still positive. Netflix, JP Morgan now getting heavy. Financials are starting to wane here just a little bit. We're seeing a little bit more red on the screen starting to appear here. Here we go. Come on, Nvidia. We are up nicely on our put options, guys. Beautiful. Come on. What I'm going to look to do, if Nvidia hits 192.50, I'll look to trim half, move stop to break even. SPY's trying to hold steady here. GDX collapsing just a little bit. What else do we got going on here? Chipotle still green. CNC acting well. Merck acting well. Bitcoin still down 0.7. Nat gas still green. Ethereum getting clobbered down 3.7%. PayPal's gone negative. You're starting to see less and less stocks holding strength here. S&P trying to bounce. China still seeing hard distribution. Oklo still holding steady. IONQ quantum names still holding steady. Few utilities and consumer staple names are holding steady here. Robinhood still under pressure. Canopy Growth making a big move here, guys. CGC now up 8.82% and starting to rip here. Crazy. Tesla is still down 1.75, but bouncing off of the lows. Look at Canopy Growth breaking to the high side. Absolutely in squeeze mode here for marijuana names, guys. CGC is ripping. Let's go, CGC. Pump it. Canopy Growth is ripper. It's a ripper, guys. Look at that move in CGC. I like it. I like it a lot, guys. Beautiful to see. Let's see if we can get our $2 calls in the money today. That would be excellent to see on CGC. I would not mind that at all. Wow, this is a crazy session already, guys. Let's look back at how Serve is doing here. Still waiting for race. Wow, Serve is just a beast as well, guys. That is filthy, filthy, filthy. What a day already. Intel still looks like a bit of a short, guys. INTC really struggling here. Nvidia catching another bid higher here. Had an opportunity. Marijuana stocks are ripping, guys. Absolutely ripping. That's crazy. If Nvidia were to head to 196.10, I would add my second entry. 196.10, I would take my second entry. Double up my position. SPY sitting right on a little bit of near-term support. I don't think it's going to hold though, guys. I really don't think it's going to hold. Let's flip back to CGC here, guys. Our call options are ripping here, are absolutely flying. Huge push here, guys. Ridiculous push. Go CGC, go. You are coming into a little bit of resistance here on CGC. So we're pushing just up over 60%, guys, on our CGC calls with members. Still looking for more, though. You are into a little bit of resistance with this downsloping wedge pattern, but I think we're going to try to press through it and get into this 180 gap. There's a nice gap fill here on CGC, so a little bit of near-term resistance, but CGC is still looking A-OK. Come on, CGC, rip it through that area. Rip it through that area. Wow, Serve is a monster, guys, up 21.5%. That is filthy. Gold still under pressure. Dixie going for another high print, guys. Your US dollar is starting to go for another print. Uh-oh. Uh-oh. Look at your US dollar. It is coming in sharply, guys. Intel still negative. Path still strong. Airline still holding. Webull having a strong day. Look at this US dollar trying to rip to the upside here. My oh my, it is filthy, filthy, filthy price action in your Dixie index today. Semiconductors are seeing quite a bit of distribution. China's still getting slapped today. A lot of stocks are red across the board. Solar hanging in there. Come on, Nvidia, give up the goods already. Intel starting to fall here, guys. Serve starting to fall. AMD curling back down here. Interesting. We could still see quite a bit of selling in this market. You look at this very, very symmetrical parallel channel. We've hit the high almost 3 times. Are we going to test the low 3 times? You have your point of control sitting all the way down there. That would just be crazy. That would be crazy, guys. If we were to test that area low. Come on down. Come on down. Marijuana stocks. CGC ripping, guys. Still ripping. Come on. Rip to the highs. Rip to the highs. Canopy growth up 13.4. All right, serve is now coming in, guys. When you start to see some of these liquidity leaders that have been pumping start to come in hard, you better take note. Intel getting slapped. Nvidia curling down. Let's take our puts in the money, guys. We're going to be printing today. We've already crushed serve. We've taken profits on XLE. We've taken profits with members on XOM. It's been a solid session already here in the live trading room, and we're still looking to take profits on Nvidia here. Again, 192.50 puts look like they're going to print in the money here, guys. They're getting there. They are getting there. Come on, Come on, Nvidia. Come on, Nvidia. Get them in the money. Get them in the money. All right, how's Ferrari doing? Ferrari still seeing a little bit of sell side pressure. I like it. Plug Power down 5. Tilray is up 30%, guys. AMD's still green. Path is up 9.4. Let me look at these airlines. AAL still holding steady. Delta still up 6.8%. S&P 500 still looking pretty heavy here. Nvidia's now looking like a culprit for more downside. Energy stocks still holding steady. Webull, still a ripper today. Canopy growth going for another new high of day. Dollar trying to go for another new high of day. Nat gas has turned negative. We have nat gas inventories in 27 minutes, ladies and gents. Midday check, we have S&P down 0.19, Q's down 0.19. They're kind of neck and neck between SPY and Q's. IWM is down 0.47. Small caps are leading the charge to the downside. Amazon down 0.9, Microsoft down 0.5. Nvidia is still up 2.5%, showing unrelenting strength right now, but we are short. Apple down 1%. Google down 0.89. Meta just turned green. That's up 0.14, showing a little bit of resiliency here in a weak market. Tesla down 1.89 under a lot of pressure. Netflix having a strong day up 1%. JP Morgan still green. 10-year yield up 0.4. VIX is turning green here. 2-year yield still green. Gold down by 0.5%. Bitcoin down 1%. Ethereum getting slapped around today. Crypto high computing stocks are still holding technical strength. Your US dollar, guys, DXY, just printed a new high of day. Oh my goodness, this dollar is ripping here. Absolutely flying to the upside. We still have the community bank meeting going on. Uranium having a stellar day. Looking at this VST still having a stellar day with the strength in the energy markets. AMD still acting well. Nvidia still holding some relative strength here, acting very, very well here. VST trying to break out intraday, going for 210. Can VST find more upside in this market? Looking pretty good, like it wants to work itself into that gap. Peter hit 200% on his IWM put options. Beautiful, 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 beautiful. Nicely done. Let's look back at S&P land here. S&P still looking very heavy here. Very heavy. Caleb asking about RR. Is it a short setup? Let's take a peek at RR. It's a tough name. It's still positive in a weak market. Still looks like it could push to prior day high, especially if the indices get a bounce. If you're wanting to short it, just keep tight stop losses. So it could fall, but it also could rally. It's a tough name. It's a very tough name. If you want to short it, keep tight stops. You know, you're just technically still holding this little bit of a breakout trend line here. I would say if you start getting some consecutive closes below this little trend line on RR, then you can look for a move back down to prior day low. But if you hold this key area, you could easily push back up. SPY still trying to find a little bit of liquidity, bullish liquidity. Let's look at Webull. Webull still acting very, very well here, trying to push to the high side. Looking at some of these lithium-based stocks again, ALB ripping, LAC still holding technical structure. LAES, what's that name doing? Dixie still acting well. That's starting to come in just a little bit. Interesting. So back to SPY here. IWM, NVIDIA still holding technical strength up here. IWM catching a fat candle bid right now. Your dollar's still acting well. Gold's catching a bit of a bounce. The market is trying to stabilize here. Markets are finding some support off of that original M-top neckline. Acting quite well. There's a shortable level on S&P. Retesting this opening range low, guys. 672.66 is your aggressive short level on the S&P 500. We should still see maybe a bit more downside. Energy stocks are still acting very well. AMD getting slightly faded here. AMD is actually coming in really hard now, guys. Hard 10-minute down candle that just occurred there on AMD. Let's look at the rest of the semiconductor complex because that should take the market down if semis fall. Semis are still the heartbeat of this market and they have been absolutely relentless. So keep your eye on stocks. You've got Intel looking nasty, looking like it wants to go lower. Let's look at Broadcom here. We're short. Wow, AMD's getting heavy here. AMD is due for a pullback, guys. AMD seeing a nice pullback on your hourly chart, potentially a nice hourly topping tail forming. Broadcom starting to come in just a little bit. Let's look at LRCX, Lam Research here. LRCX coming in just a little bit. Let's keep our eye on this SOXX here. Come on, NVIDIA. Take our 192.50s in the money. Take them. Take them. Look at SOX. SOX is starting to come in quite a bit here, guys. SOXX. It's looking pretty heavy. If it breaks that OR low, you know, there was not really much support established in this rally yesterday. That rally was truly shocking. Looked like a looked like a temporary fake rally that they're probably going to try to sell into today. Oklo still hanging in there. Google down 1%. NVIDIA still up 2.6. Still could have quite a bit of downside in this market. Intel now rolling heavy. AMD rolling heavy. Look at your SOXX, guys. That is breaking technical structure here. Semiconductors are seeing some sell side liquidity. I'm expecting QQQ to probably underperform SPY, especially if those semis start to sell off here. Look at Qs. Qs look like they want to violate some lows. Your S&P 500 still holding technical structure. Intel getting heavy here. Apple still struggling, down 1%. Google down 1%. Tesla down 1.8. Meta still green. Amazon down 0.9. IWM still underperforming. IWM is losing its opening range low here, which is 245.75. Crazy. NVIDIA is still a monster up here. NVIDIA is still a beast. Copper stocks have been faded off of the highs. Crypto computing stocks still acting very well. Bitcoin still struggling with the firmer dollar. Dollar's trying to break out of its opening range high. Rigetti having a solid day. That's up 7.5%. Tilray still up 29%. Serve is up 24%, guys. Holy, anyone still long Serve? That was a banger of a trade. Look at that. Just new highs of the session. That is what we call catalyst trading. Getting positive partnership news in the pre-market with DoorDash regarding autonomous robot deliveries. We touched base on that in our pre-market, and that is ripping. Damn, I don't even want to look what those calls would be worth. But nevertheless, we made money. All right. What are we seeing here? AKRO still holding technical structure here. Can't really do anything with that. Ticker Path is still holding technical structure up here. Could be coming in from the highs though. AMD is underneath its prior day high, but still holding up relatively A-OK. Look at Webull, guys. Webull is ripping. Webull looks like it's going to print a new high of day here. Still waiting for Vlad Tenev, Robinhood CEO, to come on the mic with this community bank. I do have it playing in the background. Robinhood is catching a bit of a bid here. Interesting. Very, very cool. All right, what else we got going on? Let's look at airlines here again. Delta. Delta's starting to get faded just a little bit. Let's look at UAL. UAL also getting faded, maybe into an area where there could be a bit of a dead cap. Wow, Jets ETF is getting slammed right now. Where are we retesting? Oof, this is looking pretty nasty on your Jets ETF. Not looking too good. Marijuana stocks are still holding technical structure here, guys. Tilray coming in just a little bit. Canopy Growth still trying to consolidate in a 10-minute chart. Aurora still holding some strength. Interesting. Let's look at XLE. Wow, look at that XLE, guys. Great job taking profits on XLE. Full round trip back to the basement. I mean, this is now into another area where we could re-enter those same calls. If you're aggressive, the XLE 8950s could still play out. We still have crude oil acting somewhat well, holding hourly chart support. Let's see what those 8950s are now worth. I mean, that was a full round trip on energy. They're now at 23 cents. Wow. We had them at 36 cents, sold them above 60, and it's now done a full round trip. That is phenomenally crazy. XOM is still outperforming your XLE. All right, guys, I'm going to do a high risk lotto play again on XLE. Actually, the dollar's just freaking a beast right now. The dollar is crazy. AMD slightly negative, Intel down 0.64, Nvidia is trying to curl to the upside. IWM still seeing some top wick distribution. Wow, this energy is tempting again. Really, really tempting. Maybe I'll take the 89s. They're a little less. They're so cheap, these energy contracts. That's why they're kind of nice to play sometimes. SOX is still seeing some distribution. Crude oil. I'm just watching crude on my other screen here. It's trying to crack its OR low. It's a bit of a problem. S&P 500. That's still holding that key M-top neckline, but looking heavy here, guys. Looking ever. Dollar's trying to break out of its opening range high. I'm tempted to get long these XLEs again, guys. I'm tempted. Let me look at this XOM chart. That's starting to trickle a little bit down here. CVX. Crude oil is still trying to hold steady. All right, guys, I'm going to take a stab on these XLEs yet again. I'm going to take the 8950s. This is a lotto. I'm just basically playing with the profits that I made from this first first trade. So I'm going to take XLE 8950s again for tomorrow. Again, this is a high risk trade. I'm going to roll my profits into XLE 8950s. So I'm back in the XLE 8950 calls. Back in. I'm just rolling my profits, guys. This is high risk. I'm going to keep a tight stop loss, probably around, I would say, 15 cents or so. Maybe 14 cents. S&P is still looking heavy. Your Russell's now coming in, guys. Still short Nvidia. Now long XLE. I'm watching SPY here as well. Let's keep SPY up for us here. I'll keep XLE on my other screen. Crude oil still hanging on to 62 bucks. You do have the dollar trying to soften just a touch. We got nat gas inventories in about 14 minutes. SOX is still looking heavy here. What else we got going on? AMD back to the dark side. Come on. Pay us on Nvidia puts, guys. Come on. We're still riding these 192.50s on Nvidia. I still think there's a chance, believe it or not, they could take Nvidia negative today. They could. XLE coming in just a little bit. SOX is still seeing some net distribution. Open Door just went negative. NEO down 3.5. China stock still under quite a bit of pressure. SPY's looking heavy. Again, members in the options trading group, we did take 60% profit on XOM. Please move your stop loss to break even on the 115 calls. Those 115s were in the money. Semis are coming in quite a bit more now. SOXX is trying to crack its opening range low. Bitcoin trying to firm up, but still down 0.81%. Nat gas slightly positive into its print, its inventory report. Nvidia still holding technical structure. SPY coming in. XLE slight distribution. Semis are trying to hold some technical structure here. Still have this community bank conference going on. Uranium still acting well. Crude oil now starting to soften. That's not going to help our XLE trade. It's still into a big technical level, XLE. A lot of volume sitting here. You could just get a little bit of a minimum retrace bounce. AMD still holding quite steady. Or Russell's trying to crack its opening range low. Apple trying to bounce just a touch here. Tesla's still trying to bounce a little bit. SPY still looking heavy. Marijuana stock still strong. ASTS still holding quite steady here. Quantum name still holding steady. BABA down 3%. Micron down 0.6%. Constellation Brands having a good day again. Take a look at ticker STZ. So that is also helping Canopy Growth move here. Remember, STZ is a majority owner in Canopy Growth. So Constellation Brands breaking to the high side here. Caleb saying Rigetti flying. Yeah, quantum names are flying right now. Rigetti flying. IONQ flying. All right, guys, I might get stopped out of my XLE. It is starting to come in a little bit. Again, I'm just playing with profits in the energy trade. But to protect those profits, I'm going to keep that stop loss. All right, guys, they did stop me out of XLE there for a small loss there. Just still protecting those morning profits. Tried taking at that volume shelf. Still holding Nvidia short. All right, S&P coming in hard, guys. S&P 500 is coming in really hard here. Crude oil now falling. Nvidia still holding some technical strength up here. You are hitting some 10-minute chart support on SPY. I could see a bounce back up to 672 and then a resumption of the downtrend intraday. Canopy growth still trying to hold some strength. IONQ, uranium stocks, nuclear stocks still holding some strength. Snapchat still down. PayPal still slightly green. GDX down a couple percent. Chipotle having a good day. Natural gas inventory is 8 minutes and it's slightly green. Robinhood is hanging in there. You do have a little bit of a breakdown occurring in your IWM. Your IWM is looking very, very heavy here. Look at this dollar, guys. Your DXY is starting to just fly here, guys. It is ripping. Look at that. New high of day. Breakout. Again, I still have the majority of my cash in my portfolio. All the cash that I'm not using is still sitting in UUP, guys. So my cash is still sitting in UUP, and look at this beautiful inverted head and shoulders on UUP. That is filthy. Crazy, crazy, crazy. Semiconductors are still trying to hold some strength here through Nvidia. Your Russell's really weak. Dollar just printed a new high, guys. Canopy growth still up about 10%. S&P still coming in. Pepsi still having a good day. Google still down 1.26. Snapchat down 0.89. Ethereum pushing for down 4%, potentially down 4% on ETH. They're still propping Nvidia up here. Not really seeing any sort of selling in Nvidia. Quite impressive. MJ ETF is up 7.5%. C3AI down. ARM is seeing some distribution. Oracle having a great day. That's up 2.85%. ORCL. Lithium-based stocks still holding technical strength. Acting very well. SPY's catching a nice bounce here. SOX are catching a beautiful bounce. VKTX up another 8.4% and squeezing. Yeah, Serve is a beast, guys. Serve is a monster. I mean, I don't even want to look at what those calls are worth, but that was a catalyst trade. We took it long, guys, off of the dip down here. This was the dip that we bought. Boom. Sub 15 bucks. That was a very nice, easy trade. Dipped and ripped. Dipped and ripped. I mean, that's what happens when you get a major catalyst like DoorDash partnership, autonomous deliveries. Insane. Anyone still holding Serve? You're a monster. You're a filthy animal if you're still holding Serve. I give you that. Diamond hands. But make sure you get some profits out of this market because things can turn around quickly. Things could turn around quickly. Just understand that. Dixie's still ripping here. Canopy growth still trying to push. How is DoorDash doing today? I looked at it in the pre-market. It was decent. Yeah, so you can see DoorDash not really catching much momentum. That's just a clear sign where the smaller company landing a big partnership is just absolutely incredible for that small company. And I mean, Serve was under $1 billion market cap. Now it's over $1 billion today with this gain if it holds it. So pretty impressive. Still such a small company. I mean, I haven't really looked into its financials. That was just a pure catalyst trade. Chart looked decent. All right, we got Nat gas coming up here in a few minutes. I am looking at that trade quite intently. Intel still negative. What else we got? Walmart's negative. Regional banks struggling. Silver still up 2.5%. Ripper. Lyft is down 2%. Coca-Cola still seeing some strength. Uber down 1. Bob is still down 3.5. Rigetti up 9.9. ASTS slightly green. Rocket Lab slightly green. Kava having a great day. Constellation Brands having a great day. VIX is still slightly elevated here, guys. Nvidia still holding short Nvidia. Look at SPY. No love for the S&P 500. Absolutely no love. AMD is still acting okay, but I think they're still going to likely take semis down today. We will see what happens. Look at our dollar, guys. Look at this US dollar. I mean, oh my goodness, what a filthy animal. Filthy. And the way the precious metals have run, I mean, the dollar has to do something drastic here to kind of slow down these commodities, right? Crazy. Nvidia's starting to chop a little bit. Will they take Nvidia negative? If they take Nvidia negative, SPY's coming down to 668. Still holding short 192.50s on Nvidia, $1.15 average on my puts. I'm up slightly on those put options. Looking for first trim into that 192.50 zone. We should be up roughly 50% on those put options if we hit that 192.50, and then we can look for more. All right, guys, so right now you still have the IWM underperforming. It's down 0.5%. QQQ and SPY are neck and neck, so there's definitely some relative strength in the S&P today through a couple other sectors, but we will see what starts to fall faster. Qs are still seeing a little bit of sell side. Here comes Nvidia. Come on, Nvidia. Come on down. Come on down. CGC is still trying to press for higher. AMD slightly negative again. S&P testing that 10-minute EMA, but we've hammered on this area for a couple different times. Copper stocks have now gone negative. Dixie's still ripping. Meta still slightly green. Tesla's had a nice bounce. Tesla looks like a fading opportunity. Intel looks like a fading opportunity as well. Yeah, if you're wanting to short Tesla here, you can short Tesla with a pretty tight stop at this region. It's looking like a fade. Oh, S&P breaking. S&P breaking, guys. SOX breaking. Come on, NVIDIA. Break this consolidation range. Pay us. Pay us. SPY getting heavy here, guys. Your Russell's still heavy. Bitcoin absolutely getting slapped, taking it on the chin. Crypto stocks are taking it on the chin right now. Ethereum, look at ETH, guys. Nastiness. Bitcoin getting slapped around as well. Come on. Marijuana stocks. Still trying to get high. Webull. Oof, stocks are really getting slapped now, guys. SOXX is breaking structure here, trying to lose its opening range low. That's very bearish. Look at the relative strength in your semis still. Just cracking your opening range low, and then you look where S&P is trading today. Your S&P has already cracked that OR low. And looking heavy. Here comes Nvidia. Let's start rolling heavy, guys. Puts are printing. Come on. Woof. Semis are ripping to the downside now. Talk about a hard down move there on your SOXX and Nvidia. Come on. Come on, Nvidia. Take our 192.50s in the money, guys. Crude oil now starting to sell. Yikes, things are looking pretty filthy here. Stocks are trying to bounce through NVIDIA. AMD trying to hold its technical structure. Micron down 1.2. Duolingo getting slapped. Snapchat slapped. NVIDIA still up 2.24. PayPal's now negative on the session. Oh shit, nat gas inventories. Nat gas inventories are out, guys. Nat gas seeing a bit of sell side liquidity right now. Yep, nat gas inventories are out. That snuck up on me. Damn, that snuck up on me. Nat gas inventories consensus was 76 billion. Build came in at 80 billion, showing less demand for natural gas. That is not a good fundamental print. That does support lower prices. The question is, do the technicals support lower prices as of now? It does look like you're in a bit of bearish price action, but the larger daily trend is still trying to hold some technical structure for nat gas. Let me see where we're hitting. We're losing the 7-day on nat gas. I think that we could easily flush down to your daily 200 moving average on nat gas, which is $3.52. That would still put nat gas down by about 2.5% today. So nat gas inventories not really showing strength. It's actually showing a bigger than expected build, which is less demand. All right, markets are still coming in heavy. NVIDIA is still holding steady. Holy moly. This market is crazy. Stocks are bouncing. Semis are catching some extra liquidity. Come on down, SPY. Don't. SPY's trying to bounce off of another interesting 200 10-minute SMA. You can see NVIDIA holding technical strength there. Meta back to the dark side. JP Morgan's trying to fall to the dark side. Another break for that community bank meeting. Wow. Craziness. NVIDIA doesn't want it's coming in. It's starting to. It's starting to. We're up on our put options. It's starting to fall. I'm gonna keep a break even on NVIDIA, guys, at $1.15. It's just the strongest stock in the market, right? And it's your world's largest company. So what's happening is the market's going through distribution. People are selling. The tech funds that can't liquidate their portfolios and sit in cash have to reposition themselves. So there's a lot of tech traders and tech investors in the market. It's predominantly the market. And a lot of these fund managers have to stay invested. So what do? They pile into the world's largest company because they have to stay invested. That's why you're still seeing NVIDIA acting quite well. It's going to come in. It's going to come in, guys. I could see NVIDIA going negative today. Just with the way things are setting up. You know, NVIDIA hit that beautiful 195 target today. Nice breakout gap up. I could see it going negative. Look at NVIDIA rolling heavy here, guys. Our puts are absolutely ripping. We're almost up 50%. Come on, NVIDIA. Taking first trim at that 192.50 zone. Come on, NVIDIA. We're up 50% on our NVIDIA puts, guys. That's an easy money trade. Look at SPY rolling heavy. Semis are seeing more distribution here. IWM going for another new low of day. Guys, we're printing profits today. Oh, beautiful. Beautiful. Come on, NVIDIA. Don't you fucking dare bounce there. You little... Ah, NVIDIA. You stubborn. You're so stubborn, NVIDIA. Nat gas trying to bounce. Bitcoin getting slapped. QQQ and SPY are still kind of neck and neck here. All right, IWM just printed a new low of day, guys. Your Russell is getting slapped around right now. IWM is getting slapped around. Come on, NVIDIA. Still haven't taken my first trim yet. We're up 50%. Looking to get these 192.50s in the money for first trim. I will trim half. Come on. SPY is rolling here. SPY is absolutely rolling. Trader 586 is long on the Qs. All right, good luck. Be careful. We're super, super, what's the correct word? I guess we're manipulated here because of NVIDIA. SPY's still holding here. QQQ. Yeah, you could get a little bit of a bounce. I still think the bigger level on the Qs is at 10-minute EMA. But right now it is seeing a bit of a bounce. NVIDIA still showing signs of accumulation. It is a tough SOB. Guess they don't want to pay me on NVIDIA. Not just yet. Oh, you're going long SQQQ? Okay, nice. Alright, so SPY's trying to bounce here. You are seeing a bit of liquidity being pumped back into NVIDIA. Your Russell 2000 is still looking very weak. AMD is still slightly negative, but bouncing off its opening range low. Uranium stock still holding steady. You've now had a full round trip in IONQ, guys. That is coming in. You could probably see Rigetti also see some sell side pressure. So Rigetti looks like it's doing the good old gap and crack. Your US dollar is still pushing here, guys. Dixie is ripping to the high side. It is just an absolute beast right now. Let's look at AVGO. That's still actually holding quite steady. Let's look at Microsoft. Microsoft down 0.62%. Not looking too good on Microsoft. Let's look at Tesla. Tesla down 2.5%. Crazy. Look at Tesla. That's a nasty 10-minute chart pattern. Meta's still holding up okay. Apple. Let's see what Apple Dapple's doing. IWM still looking exceptionally heavy. Wow, Apple's nastiness. Apple down to the lows. Apple looks like it's going to come down to sweep this hourly chart liquidity, guys. We'll see if Apple wants to sweep this area today. I could easily see it coming down to there. What else we got? Hood is seeing some pretty decent distribution now, guys. That's coming in hard and heavy. Your SIL J's coming in hard and heavy. Let's look at gold real quick. Gold is still coming in quite a bit. NVIDIA, come on down, NVIDIA. We're up over 55% now on these puts. Let's print it. Let's print it. Nice job, Trader 586, making money on Rigetti. We're going to take our first trim here on NVIDIA, guys. Look at this. Beautiful move on NVIDIA, coming in hot and heavy, guys. All right, guys, there's the 192.50s in the money. Just took my first trim at $1.87. First trim at $1.87. Wonderful. That was a clinical trade, guys. That was a beautiful trade there. So nice 62% gain on NVIDIA puts. I like it a lot, guys. That was beautiful. Stunning move, guys. Stunning move. All right, let's flip back to the S&P 500 here. I'm just going to keep a break-even stop loss on NVIDIA, guys. A break-even stop loss. I still have 8 contracts left on NVIDIA, guys. 8 contracts left, trimmed half of them. AMD starting to get smoked here, guys. Now you're going to start to see the Qs underperform here. Why? Because semis are giving up the goods today, guys. May I ask about Dell? YS is asking about Dell. I am so salty on Dell. That was a huge paper-handed trade that I missed yesterday. We had the 150 calls. Excuse me. Dell's still strong. Dell looks like it could backtest its 7-day moving average, but a very, very strong chart still. Obviously, it's under pressure with the whole entire market today, but Dell still could move higher here. This is going to be a name that once the market settles down a little bit from the sell side liquidity, Dell's probably going to get a bit of a dip buy. I'm not looking to really trade anything on the long side yet. This market is very skewed to the upside due to semiconductors. And I'm waiting for extreme levels. Like, for instance, personally speaking, me on SPY, I would only consider a long on SPY into the 668 zone. Look at NVIDIA, guys. We are still printing money. I love it. Absolutely love it. Contracts are ripping, guys. Absolutely ripping. That was an easy trade from $1.15 entry. Called out here in the live trading room. We called out serve as well. Look at NVIDIA, guys. They want to maybe take NVIDIA negative. Just be careful. Be very careful. No problem. No problem, YS. QQQ underperforming a little bit. Dixie still holding steady. Your VIX is at 1070, up 2.34 on UVXY. Come on, NVIDIA, keep rolling heavy here. AMD breaking its OR low. You have your SOXX drilling right now. Nastiness. There is 4-hour chart support on your semiconductor ETF, your SOXX, at 287.79 is your 4-hour 7MA. Your daily chart 7MA, which is honestly something that I would not surprise me if we retested. If we retest SOXX, that 7 day is sitting at 284. So this is what is worrisome right now in terms of price action, is the market was staying elevated through NVIDIA. Now NVIDIA is softening up a little bit, so that's what could continue to hurt this market just a little bit. Abe is saying there's a gap fill all the way to 189. That would be nice. Yeah, it would be nice. Look at SPY, guys, coming right back down to our 7MA. SPY is coming down to that 7MA, sitting at 670.14. We are drilling here, guys. You've now had 1, 2, 3, 4, 5, 6, 7, 8 consecutive down candles in a row on your S&P. We are getting heavy here. Semis, IWM ripping to the downside. Ripping. Nasty price action in the equity markets today. But we have taken quite a bit of profits already this morning, guys. IWM is just drilling. SPY drilling. Look at your Russell, guys. That Russell is respecting that channel that we drew yesterday. So we'll show you that little symmetrical channel. Semis are still under pressure. Now, what could happen is we could try to bounce here and maybe retest OR low. That would set up for a potential inverse head and shoulders on the IWM. And then we would have to see what market makers do. But wow, Russell's looking heavy here, down 0.81% on your IWM. Looking pretty nasty. NVIDIA trying to stabilize off that 192.50 zone. You got a big 20-minute EMA 113 coming up on your SPY. Let's look at this 15-minute chart. I think we've blasted through. Yeah, we've blasted through that key moving average. Seeing a little bit of strength creeping back into the picture. TSMC or TSM shares dip over 1% amid revenue decline. Thank you for that observation. Let's look at TSM here. Big bounce on NVIDIA, guys. Yeah, TSM down sharply. CGC still holding quite steady here. SCCO still curling to the downside. Webull, which was strong off the open, getting slightly faded. You are seeing a decent bounce in the market. Still have Netflix outperforming. That's doing really, really well. Gold trying to stabilize. Let's look at Intel real quick. INTC coming in a little bit. A bit of a bounce coming back into the markets. Remember, we are heavily skewed in this market because of NVIDIA, guys. You had that initial selling in the major indices. All that liquidity that was sold early on flowed into NVIDIA. The big question is, are they going to keep selling NVIDIA? Because this market can go lower if they do. Serve is still absolutely ridiculously strong. Tilray still up 26. Your airline stocks are getting absolutely sold into still. Delta trying to stabilize here. Bit of relative strength. Let's look at Marvell. Marvell still holding steady. Tesla absolutely weak on the session. NIO, that's coming in quite a bit. Looking nasty. Let's look at BABA here. AMD trying to bounce. Wow, BABA's doing a full round trip, guys. Down 4.5% already. Yang ETF up 3.37, trying to make a bit of a move higher here. Very interesting. Again, not too many stocks are showing strength. You got crude oil now trying to bounce just a little bit. Robinhood getting smoked. Let's look at SoFi, SOFI. That's still holding not too bad. Roblox. Again, guys, please hit that like button. You know, from NVIDIA puts to serve puts, or sorry, serve calls to NVIDIA puts. We printed profits on those XLE pump earlier on. Lost a little bit on the secondary day trade long, but just played with profits there. Interesting. Here comes more NVIDIA selling. Let's see what happens. Tesla still down 2.5%, guys. Tesla still looking really weak here. Let's look at Ferrari. Still never got my alert on Ferrari. Ooh, that's coming in, guys. That is coming in. I like it. I like it a lot, guys. Let's see if we can get a big trade on Rari. Come on down, Rari. Come on down. It's your time. All right, open doors, seeing a little bit of sell side liquidity now, guys. OPEN. NVIDIA's still trying to stabilize here. Open door, not looking too good intraday. Nasty. Nasty, nasty, nasty. All right, what's still showing strength? Pepsi having a really good day. Up a couple percent. Google still struggling. Snapchat struggling. ZTS acting well. Starbucks green, Enphase green, CRM is green, CNC slightly green still. MRK is green. So you're still seeing a bit of strength in your healthcare stocks today. MRK trying to bounce. Let's look at UNH. Yeah, ASTS and Path are showing some strength still. UNH showing some strength. Path is still showing some strength. Yep. But again, I think that one's probably going to get faded. It's going to kind of correlate to NVIDIA, in my opinion, because it has that OpenAI momentum. Shuffling that money. Nike. Let's look at Nike. Yeah, Nike coming in, guys. Nike is coming in. I said I like that liquidity sweep low, and I would consider going long Nike. I was tempted yesterday. I'm glad I didn't. But Nike, I like it as a sweep of this low. It's looking interesting. Interesting. Our markets are catching a bit of a bounce here. Nice price action in solar stocks. Nat gas is getting clobbered now, guys. So Nat gas is probably looking to retest that daily 200 moving average. Not looking too good on Natty. Look at that weekly 200 MA rejection. Nasty topping tail, guys. Huge topping tail. Crazy. All right, semis are still bouncing through NVIDIA here. Ethereum down over 4%. Look at Mphase today, EMPH, that's showing some technical resiliency. LAES, that's on the high volume list, breaking to the high side, trying to show some strength. Bola's on your high volume list. Rigetti's still up a couple. Tilray still up 26.7. What's DNN doing today? DNN is showing a little bit of resiliency. Market's bouncing here, guys. Strong bounce in S&P land. Nvidia bouncing. Higher market seeing some extra liquidity. CMG showing some signs of life. Let's look at STZ again. STZ still looks like it wants to challenge that high pivot earnings spike. Let's look at UPS here. UPS appears to be putting in a bit of a bull flag pattern. Looks like it. Interesting. Big bounce occurring in the markets, guys. A really decent sized bid. This is a shortable opportunity in the market right now. Your dollar has gone through a bit of consolidation. So this is a shortable pop. You have the SOX retesting its opening range low. You have SPY backtesting that 10-minute EMA. IWM has had a nice 10-minute chart bounce. So this is a shortable pop, guys, on SPY. It's aggressive. I would say your stop loss would be sort of a 10-minute close above this EMA 113. Again, they might chop us around a little bit in SPY for the rest of the day here. So I would look at maybe tomorrow put options. Google's still looking pretty heavy here. Nvidia still acting quite well. Bitcoin still struggling. Crude oil still struggling a little bit. Big bounce on your Nvidia chart. Still trying to push. Google still struggling here. Looking pretty heavy. We'll see if it can catch a bit of a bounce here. Marijuana stocks are getting slightly faded as well. Biotech is still showing resiliency. XBI up 1.1% even with the decline in the Russell. Pretty incredible to see biotech still holding such strength. Very, very impressive. Semis are still acting quite well. Big bounce in the equity market. Big bounce on your S&P 500 trying to occur here. NVIDIA is still trying to show some structure here. You're still pumping up your semis, your Russell, your dollar's still consolidating, taking a bit of a breather. SPY's trying to break out here to the high side, getting through that 10-minute EMA, trying to at least. SPY's trying to hang in there. Still trying to bounce here. Who is speaking now? You got still a committee. Jim Cramer's speaking right now. Jimmy. AMD curling down. Apple still trying to hold steady. NVIDIA still a beast mode. Big punch through on your S&P, guys. Really big push here in SPY. ASTS firming up quite sharply here. NVIDIA pushing. Semis are trying to push. IWM still acting somewhat decent here. Big bounce in your equity market. SPY still acting very, very well here. NVIDIA has had a tremendous bounce. Market is bouncing quite nicely. Coming up on the 11 o'clock time frame, markets have had a nice recovery off of the lows. Seen some considerable strength creep back into individual names, specifically around your semis. Trying to push a little bit. NVIDIA is still firming up quite nicely, guys. S&P has had a really sizable bid back to the upside. Your dollar trying to catch a little bit of more positive momentum. Still testing 99.26. S&P, big bounce and continuation. Looks like it wants to target the 5-minute EMA here. Busted back through that 10-minute EMA. NVIDIA, again guys, I'm going to make sure that I don't lose on NVIDIA. Keep that break-even stop loss if you're still short, which is literally just tagging right now. Strong bounce, guys. Strong bounce in that equity market. The DXY still looking pretty decent here. Point of control on the IWM is sitting at, let me just find it here. Monday, where is Monday? All right, so the weekly point of control, I'll pull up the chart here briefly, guys. Let's show you the IWM. It's much higher, the POC on the Russell. So your IWM point of control volume shelf is sitting at 246.39. You can see we tagged that value area. That is your value area low. So we pierced it. Now you're back above it. So, and this is the thing, right? The market is now setting up almost this pattern where it looks like there's an inverse head and shoulders on your IWM, right? So that's why you're now getting quite a bit of dip buying, because there's going to be a lot of bullish investors that try to front run this right shoulder. All right, so this right shoulder, if it starts to curl up and makes an attempt at breaking out, you got a really big bullish pattern that could be forming on your Russell. And kind of similar structure on your S&P 500. I mean, the S&P 500 is not as clean because you had that breakout and it failed. But you also have what appears to be a left shoulder, a head, and this right shoulder forming. But I'm suspect because this tried breaking out into an all-time high and it did that failure. So I still think we could head down to the low of that channel there. We'll see. We will see. That's what makes it tricky, right? Apple semis are just now ripping, guys. Your SOXX has really firmed up quite nicely. Your US dollar has just printed a new high. Quite crazy to think that Dixie's still squeezing and markets are still holding steady here. Still holding. Crypto not really liking the strength in your currency markets. Ethereum still down 3.7. GDX now down 3%. China stocks BABA still down 4%. That dollar is strong. AMD still fighting, showing some resiliency. Look at your SOXX, guys. The dip buying in semis are ferocious. Just ferocious. Nvidia is still holding some technical strength here. Crazy mover. Let's look at that IWM. So it's a nice clinical bounce off of that trend line. Russell's holding quite steady. Markets are looking a little bit better here, guys. We are seeing some strength. That dollar's scary, though. That Dixie's pushing here, but markets are like, we don't care. We're still in a raging bull market. We will bid this thing back to new all-time highs. No, that dollar needs to be watched, guys. That thing is just ripping here. Busting through daily chart support. Again, we're almost at TP1 on the dollar. Crazy. Marijuana stocks still holding steady. Webull trying to creep back to the high side. Ticker BULL. contemplating getting back into NVIDIA puts again. I think the risk to reward has now been squeezed out with this bounce. You know, I did get stopped out at break even on the other half. We took just over 60% on the first trim. Contemplating here, guys. Tempted. Maybe it wants to make one more sweep of the high. I'm going to wait for one more sweep of the high. If NVIDIA sweeps this high, guys, I'll look to short it again. SPY curling, Apple falling, IWM seeing some more sell side pressure. Oof, I'm tempted. I'm tempted to fade NVIDIA here. Looks like NVIDIA wants one more high though. Apple just dumped their guys on the 10-minute chart. Intel might be an easier short. It's looking pretty weak as well. INTC. Trying to bounce though. Not bad. How is Serve doing? Let me take a peek. Serve starting to come in, losing that $17 area, trading at $16.50. It's an aggressive buy. It's up still 20%. You're back testing kind of your... Well, actually, I would wait for a little bit lower. Serve gets interesting sub $16 again. Your dollar chart is still squeezing, guys. That Dixie. Oh my goodness, that dollar is just filthy. So the whole market has pretty much seen a nice bounce across the board. You know what stock looks good intraday is MRK. MRK is trying to squeeze here intraday. It's like a UNH again. UNA, how's Oscar and Hims doing? Crude oil, guys, is now starting to bounce off of its prior day low. So they're trying to defend crude. WTI getting a sharp bounce off of the lows. Perhaps XLE is ready for another push to the high side. You have had XOM turn green again. How is HIMS doing today? HIMS. Yeah, that's under a bit of pressure today. AAL has pretty much done a full round trip here. Interesting. Airlines doing that gap and crack, guys. That's crazy, eh? Delta's still holding up. UAL still holding up. What about JetBlue, JBLU? Wow, full on gap and crack on JetBlue. That's crazy. How's the Jets ETF doing? Also pretty much the good old-fashioned gap and crack. That's some hard selling. Hard selling. Uranium still strong on the session. Wow, Ford continues to crumble here, guys. Ever since that devastating fire happened in Ford, it has just crumbled to the downside. NVIDIA is starting to come in now. Nasty. VIX is getting slightly faded here. You have your Qs and SPYs still kind of neck and neck in terms of price action. Amazon back testing its 7-day moving average today. How's JP Morgan doing? JP Morgan looking pretty weak still. ARM is ripping. Let's look at ARM here on my other. Yeah, ARM is ripping, guys. Trying to break out to the high side. I have an ARM target of about 189. 189. But it's looking strong. How's SMCI doing? SMCI still holding some technical strength. Interesting. Still seeing the market acting quite well. S&P is consolidating intraday. Like it wants to make another little push higher here. Nvidia is still up a few percentage points here. A little bit more green starting to appear on the screen. Marijuana stocks are continuing to try to push up here. Apple's still looking weak. Your Russell's retested its opening range low. Firm having a really good day. Home builders are still under pressure, guys. Lennar continuing to scream lower. Aluminum stocks, decent. Alcoa has been a monster. Zoom having a decent day, ticker ZM. Bouncing quite nicely. How's VFC? These retailers? Wow. Markets are still trying to bounce. Nvidia is still pushing. Carvana getting smoked today. That's down 3.18%. Knifing to the downside. CVNA. WBD. That's gone through a nice pullback. Datadog positive. Upstart is positive. Roblox showing some strength. How's Spotify doing? I'm just looking at it on my other screen. Spotify trying to firm up off of the lows. Interesting. PRME, Prime, going through a bit of sell side. Nvidia is still trying to hold here. IWM is trying to recapture its opening range low. Let's look at Crocs here. GTLB. So we got going on here. App Lovin down 4.96 today. Interesting. SoFi holding some relative strength. It's looking pretty good. Let's look at some of our 2022 high PEs. Trade desk still holding steady. Wow, ALB, lithium stocks. Crazy trades. Enphase having a really solid session today. SPY. I'm just doing some scans of the entire market today, guys, while we're waiting for the market's digesting this recent move down. Wow. Honestly, look at this dragonfly. I can't believe I sold out of my position so early. Making profit on it, but I hope you guys are still holding DPRO. I mean, that's crazy. What a mover. I wish I still had my commons. Oh my gosh. That is filthy. That is crazy. Dragonfly. So SPY is bouncing sharply off of that daily 7 moving average. So the last time we tested that, we bounced new all-time highs. But the momentum is slowly starting to wane on the market. We're still holding a very strong daily chart, weekly chart uptrend. But the bounces are off that 7-day moving average are getting a little less, they're showing a little bit less of strength. All right, what else we got going on here? Let me check insider selling here. Lyft is having a hard down day today. LYFT seeing some nasty selling. AMD starting to trickle. SPY looking a little bit heavier here, ladies and gents. Looking a little bit heavy. We rolling. You see me rolling. They hating. Patrolling. Trying to catch you. Good morning. It's okay. I always type in caps. I don't think you're shouting at me. Don't worry. For some reason, my brain sees caps locks better. I need to check something. I think there's a trade set up on the long side for a swing. Let me check this ticker. Let's see. Dollar just printed new highs, guys. AMD softening. IWM hard selling. S&P getting smoked. You still have that banking conference going on with Jim Cramer and a few other banksters are speaking. SPY's getting real nasty with it. SPY coming in hot and heavy. Nvidia softening. AMD cracking that OR low. Dixie at the highs of the session. AMD guys is looking heavy here. VIX is creeping up. S&P still looking a little bit heavier here. On that now. AMD getting slapped, guys. AMD is starting to get heavy here. Potential little 10-minute head and shoulders intraday on your AMD chart, guys. You can see you're testing that neckline break right now. We'll see if that wants to translate into anything. Apple's struggling, Russell's struggling, your dollar's just pumping here yet again. S&P is selling off here. Not looking too good on SPY land. Bit of a bear flag on S&P forming. It's losing some critical 5-minute moving averages, which means that we could dump. We could easily dump. Apple's looking nasty right now. Apple curling down. Your dollar's still squeezing. VIX is trying to push. UVXY, guys, is starting to try to gain some momentum after it had a hard sell. Starting to push here. IWM getting slapped off of its opening range low. Punishing a little bit of those late chasers. Apple's falling sharply, curling to the downside. Google down 1.96, looking filthy. Tesla down 2.11, looking filthy. Meta, absolutely looking very good, up 0.83. Microsoft down 0.97, not looking good. Amazon still holding daily chart support, but down 0.85%. QQQ back underperforming SPY. Bitcoin looking filthy, testing 121K. Gold down 0.6, nat gas down 1. Crude oil softening up here. Apple just violated the lows, guys. Apple just violated the lows. Look at that nasty breakdown on Apple Dapple. Apple, what did I say? Looks like it's going to do that big old fashioned liquidity sweep of this hourly candle, guys. If you're wanting to take Apple for a dead cat bounce after it sweeps this liquidity, that could work out. Wow. So here you have Apple showing disgusting price action, Meta resiliency. Let's see if Google wants to follow in the communication basket ETF. How's Google's chart looking? Just filthy as well. At the lows, snappy. Snap, snap, snap. Snap's trying to bounce. SOXX. Still looking pretty filthy. Potential head and shoulders as well. Nvidia still holding some relative strength. All right, guys, I'm really hungry. So I'm just gonna grab some food. If anything happens, I would trade SPY on the long side down here at the lower boundary channel. But it's been a good session, guys, for us in the live trading room from serve calls in the morning, netting over 100% on the last trim, to Nvidia call option or put options. Nice trade there. I did lose a little bit of money initially shorting SPY off of this area, but it was a small amount, had a tight stop. Nice profits booked on energy, XLE, and XOM. So it's been a good session here trading, guys, and we'll see if there's any other opportunities late into the session, but it does look like the markets are still heavy here. You got to keep your eye on those semiconductors because they're still the heartbeat of the market. That dollar index is just continuing to grind, stair-stepping its way higher on the 10-minute chart. I mean, next kind of resistance after we hold this 99.40 area is the $100 level, guys. And that $100 level is going to be a massive psychological resistance for the market. If we look at the structural setup on the DXY, you have been trading under 100 for quite a while, right? The last time we had made that peekaboo breakout above 100 was in early July. and they slapped the market down. So if we flip to the SPX daily chart, and again, this is just a little bit of some cycle analysis here. But you look at where we were trading on July, right? Look at this July candle here, guys. Look what it matches up with on the Dixie. Your Dixie high spike just so happens to match up with this decline in the S&P. So just be very aware that Dixie is approaching, yet again, that same area where the SPX and S&P saw a nasty 2-day decline. So that was about a 3% decline in the major indices. Just be aware of that, guys. You look across the board, and I mean, there's still so many charts that are parabolic. There's still so many dog shit companies that are not making any sort of revenue, just screaming higher. I mean, you measure this market against really sort of any historical metric, and we are just extremely overbought. Even in some of your world-class companies, NVIDIA, AMD, I mean, Micron, Western Digital, there's a lot of crappy companies that are just, I shouldn't say crappy, but there's a lot of good companies that are still just stretched. But nevertheless, just be careful because that dollar index hitting that 100 psychological could yield a sell like we saw previously. The bullish side now, since we've just discussed the bear case, you're still holding that daily chart 7 moving average. And the market's still giving us higher highs and higher lows. So the trend is still strong, but look at that wedge formation. We are getting tight. We are getting very tight on that wedge formation. All right. So we will see what happens with the equity markets today. If we get that bearish close below the 7, let's just look at how we set up there last time. Ooh, guys, race. Just as I'm about to go eat some food, race is hitting my long level, guys. RACE coming in. Oh my goodness. Why you gotta do this to me? I'm freaking hungry. I'm trying to go eat. And now it just hits my level. Are you serious? I've been waiting all morning for this. They don't want me to eat, guys. Look at SPY dumping here. Ferrari is down 14%, guys. It has had a big move to the downside. Look at that S&P 500. Apple dumping, AMD dumping, Russell dumping. Nastiness. NVIDIA still holding some technical strength and structure. What are we at here? 480 call? That can't be right. 15 cents? So I'm going to play this banking in the background, this little meeting. Again, I'm looking at 410 Rari calls. We are coming into this area hard and fast. Hard and fast, eh?
Come down, roll down the hill to them needs to be pulled back because they don't need to be under the same regulations that bigger banks are.
If they have a simple business model and they're not trying to do anything esoteric, but, the problem is some of these small banks will go buy 30-year CMO securities. They don't even know what they are. I sure as hell don't know what they are. And then all of a sudden their balance sheet's upside down because they did, things that were less than smart.
And I want to say something to that because this is one of the courses I teach is a high-performance banking course. And when you look at banks, publicly traded banks, and you could look at family-owned banks, and it's very similar. You've got lower performing banks, you got mediocre banks, but when you get out here in the high-performance banks, there are very few. Well, if we can take these banks, and this is what I want to do in my retirement years, is work on this and teach this course. If we can take those banks and move them to high-performing banks, we have a lot more vibrant banking system in this country, and we're a lot stronger. And so that is a real goal for me. Those banks that buy the wrong bonds, it's all in education, you know, and let's get that education out. You know, we, at our bank, I'm a firm believer in education. We've sent more students through Swigsby than any other bank in the country. And we do that in I want my people as educated as they can be. The smarter we are, the better we are.
You know, my argument is I think most regulators think capital assets is the primary, you know, metric that they want to see.
Right.
To me, I think that's all wrong. I think it's profitability. If you have a strong, if you have a 15% return on equity, you're making money, and you've got some problems, you can handle them. But, you know, if you get in you know, we saw banks that had a good capital base when they got into 08, and they really had problems, and the banks, you know, some failed, some had to go away. So I think profitability is something that the regulators don't really care much about.
Well, that's ridiculous. I mean, profitability is your businesses. I want to look first at I want to see some profitable growth. All three of you have profitable growth. All three of your businesses look like businesses that I want to invest in. I do not want to invest in a bank where I have no idea what they own, because I know, therefore, they have no idea what they own.
But a little bit back to your business, right? So last week or 2 weeks ago, NVIDIA writes a check for $100 billion. So they traded, what, 50 times earnings?
No, 27 times next year's earnings.
And Apple's at
18 times 27 earnings. Apple's at 32 times earnings.
And Amazon trades at?
Infinite. Well, 52 this year.
And the S&P's at 23?
Correct.
And we're at 9. And if you think about this business, it's a tough business, right? So leverage 10 to 1, you're buying into a blind pool of credit risk. You got a high fixed cost business, branches. I mean, we'll be a little bit different on this, but it's like, where is that going, right? And when you see these agents, I mean, I talked to our call center guy yesterday, right? So how's it going? Great, right? We up? Yeah, we're up. We're up 10 or 15% year over year. Let me ask you a question. Are the questions the same, to Scott's point? They're the same. Will you send me the questions? 205 questions. So the average bank answers the phone in 6 minutes. We're at 2 minutes. Can it be 1 second, right? If there's that much efficiency and these agents can handle the calls that you talked about, Scott. But then where does that go, right? So everybody in this audience has a money market account at a bank, and that bank is paying you 50 bips. I pay $3.50. Why are you at 50? Because you opened that checking account when you were a kid, like you did, and whatever savings loan you talked about.
That's true.
So will an agent someday be able to move that? And all of a sudden, we got to reprice the entire book of money market. It is, you know, again, basketball. You shoot 65%, you're in the Hall of Fame. Baseball, 400, you're in the Hall of Fame. In our business, if you don't bat about 99 plus, she's fussy. Right? I mean, we got to go figure that out.
Well,
right?
you know, I look at your bank. The 9. This is a historically low PE multiple for your bank. So I go to try to research your bank with Ben Stoto, who's my research director, and I have to say, there's not enough. There's not enough research, because every piece of research is unbelievable, and I've got my file about what you've accomplished, and you know I got something in it, but it tends just to be the public filings, because where are the articles that I need? Where are the articles that tell me a lot? And there's 2 firms. Thank heavens for this Fortune magazine, Inside America's Top Small Business Bank, because you have 2 companies that write on you, and because you had a bad loan or something, they have a neutral. So to some degree, it's trying to get the story out. And thank you, Madam Vice Chair, for giving us a chance to tell the story out, because all of your banks, I find, I mean, look, I like NVIDIA and I like Jensen. I mean, look, I got to remember in the end, I entertain and educate, but NVIDIA was a good one that I caught. But the only reason that worked is, you see, I named my dog NVIDIA, then America bought it. So maybe I got to name my dog Live Oak.
Wow, that would be good. That would be good.
But there is a problem. There's a dearth of information about all your you are all unbelievable banks with tremendous records. I did not, I knew Encino. I did not know your connection with Encino other than I heard, well, it's connected to a bank. You have generated more venture capital wealth than any banker. I didn't know it until I went to work on reverse. You talk about reverse vertical, because I knew Encino. But these are stories that they don't get told. And I struggle over how to get more coverage for you guys and get more stories about you. And I wish that maybe offline I can try to help, but there's just not enough coverage, because all of your banks they're so much better than the average stock. And I wouldn't have known them if you haven't put this together. I'm pointing to the vice chair. It is. Why do you not have more coverage? Why do you think you don't have more coverage? What is the impediment?
We trade 200,000 shares a day. Nobody really cares.
It's liquidity.
Yeah, yes.
Bank stocks are close to their, they're not far off our all-time lows.
No.
Right. March of 2023.
And I would tell you, we're performing better than a lot of businesses. And we're kind of the stepchild right now.
I think that's true. I mean, when I look at the non-performers, they're remarkably low. I don't want that to discourage the Fed from cutting, because I think that's a different thing between the way the good discipline that you have in terms of your lending versus what we need to see, which is more lending, and that's part of the government's fault, and that's part of the curve, which the part that they could control. But I do think that when I look at your situation, if you get your multiples up and get more capital to you, our country would be a lot stronger. And I struggle over how we can all do that. We need to tell the story of the bankers in this room who I know the liquidity is really only lends itself to the retail investor, but the retail investor is coming back in a very aggressive way. And we have to steer them not just to NVIDIA, but to something like your banks. I don't know you don't have the coverage right now.
No, we don't. No.
Well, look, I know we got to end on soon. I started with what's going well, and I'm not going to end on anything other than constructive. Tell me one thing the government could do right now after this meeting that would make things better. And I know I got to limit you to a very short period of time because I'm moving this thing over. One thing the government could do. Wow.
I can't think of anything.
I mean, less regulation. I've already said what I think they can do to help community
I just
banks.
wish we knew, which entities got to look different, change its style.
I think they need to hear what we heard this morning. And that's the most positive I've heard in any banking.
I thought so too. Funny you say that. I thought so too. Just positive.
It's just positive. We needed positive news. We needed, this country to have positive news, and we have positive news, and things can get better. And all of us want our banks to be better. We want the banking system to be better. And so let's talk about it.
Well, I'm from a different color state than you guys, and it doesn't seem to affect anything.
I'm more optimistic about community banking than I've ever been.
Me too.
Oh, that's
I
terrific.
mean, we could compete with the big banks. We absolutely can. The millennials have gone to the GSIB banks, and the lower end mass market retailers gone to fintechs. But there's a whole world of people left out there for us, affluent.
I couldn't agree more. I got to get in one of your verticals. I'm in the alcohol business away from this job. I don't know if you're in that one, but
We are.
Oh, then we'll talk after. Anyway, I want to thank everyone for listening to our ramblings, because I hope they made sense to you, and to gentlemen, just fabulous, uplifting, constructive thinking, and Vice Chairwoman, thank you so much for what you did.
Thank you.
Good to know you, Jim. All the best. See.
Thank you. Thank you so much. very much. We now have an excellent panel lined up for you, tailoring capital and liquidity standards for community banks. Thank you.
Thank you very much. My name is John Eggemeyer. I am with Castle Creek Capital, and I will be moderating today's conversation. The comments we've heard earlier today cover so many of the capital issues that relate to the industry. What our goal is today is to try to put some specificity to things that can happen within the regulatory framework as well as the legislative framework. Let me begin with a few comments. And the story begins with interest rates, but I promise we're not the interest rates you think we might want to talk about. We want to look backwards over the last 5 years to what's happened because the industry has been impacted severely by COVID, by the stimulus that was put in place, and the various loan programs to stimulate the economy during COVID, followed by a flood of liquidity, and then a spike in interest rates. What that has done is to take us to where we are today at the tail end of an inverted yield curve that's been in place for 564 days, the longest in 48 years, and devastating in an industry that relies on spread income. It's hard to borrow at higher rates at which you're lending. So investors are not ill-informed. We've seen a response to that which has been serious as it relates to the availability of capital for community banks. And just to frame the universe here, since 2017, we've had a 45% decline in the number of banks in this country. Over that same time period, we've had a 35% increase in the number of banks, 500 million to 15 billion, which is, in fact, sort of the prime area of community banking. When we look at capital flows as an outgrowth of this time period, there's been negligible growth in capital flows into bank-focused ETFs, while the ETFs of the general market have almost doubled. You look at the IPO market, we've dropped from 7 to 8 IPOs, averaging $800 million each in the time period preceding the last 5 years. Now we're averaging below 2 a year, and the dollars being raised are only about 100 million. And as an anecdote, I would say there was one good year in the last 5 for raising capital, which was 2021, in which time there was $6.2 billion of new equity raised, but 80% of that went to just 4 banks: Silicon Valley Bank, Signature Bank, First Republic, and last but not least, Silvergate. As you all know, none of them are with us any longer today. So I'm not sure that's a model that we want to replicate here. What we'd like to do now is to dig into, if you will, the nuts and bolts of where capital can be created for community banks as we bridge to this period when public investors will again return to our sector, but we just don't know when that might be. So we're going to begin with the community bank leverage ratio. And I've asked Kathy Owen to lead us off. She is the CEO of Eagle Bank. I'll let her say a word about her bank. And she is a participant in that program. And give us your thoughts. Why was it attractive to you, and why is it not attractive to others?
Absolutely. Thank you. Yes, I'm the $490 million Eagle Bank and Trust out of Little Rock, Arkansas, not the massive one you see up here. And we are a privately held bank, and as was mentioned, we do participate in the CBLR ratio. And I've been asked a number of times as to why so many community banks have not chosen it. And I think we have to start with the very beginning, the timing of it. If you think about it, that simplified CBLR was published September 17th, 2019. What's the busiest quarter for banks? It's the final quarter of the year. It was effective 1/1 of 2020. What did the first quarter of 2020 bring us? COVID. Everybody was drinking out of a fire hose for an extended period of time. I feel certain for a number of community banks, it got shoved aside. It was optional. It wasn't important. I'm really excited to hear earlier today about the building of the framework of education, because so many of our smallest community banks are lacking in resources, and they need that education and could greatly benefit from the time savings of utilizing the CBLR. And it's not only the time savings, but the burdensome, cumbersome, a lot of adjectives there on calculating the accurate risk weighting that is necessary to really do it properly if you choose not to go with the CBLR. There's also community banks that haven't chosen it because their capital or their Tier 1 capital may be close to 9%. They're afraid they're going to drop down below it, maybe get out of the grace time frame, that period that's there. So they want to continue using the risk weighting calculations because they don't want to have to reinvent the wheel. And then I've also had bankers tell me that their regulators have asked for the risk weighting calculations even though they've chosen the CBLR, which if they've chosen the CBLR and they qualify, it should be acceptable, and there shouldn't be another question as to that. But I really think that one of the most important things for the smallest community banks that can benefit the most is the lack of resources and the need for education on how beneficial the CBLR would be to them.
Thank you. Turn to my other panelists. Anybody else want to weigh in on this subject?
Yeah, hi, I'm Tom Fraser. I'm CEO of a $3.4 billion mutual holding company that has five mutual banks in Ohio, Kentucky, West Virginia, and Virginia. And we were initially elected to use CBLR, but we floated too close to that 9% ratio. And the consequence of going in and out and back and forth turned us away from the CBLR ratio ultimately. Some things too, especially with COVID, with it hitting in 20, we had an influx of liquidity and deposits. That put a lot of pressure on that 9%. So a quick fix, a quick idea would be to maybe exclude deposits that are held at the Federal Reserve or other low risk or hardly any risk weighted ones. And that, if that's excluded from the CBLR calculation, I think in our case it would have been about 60 or 70 basis points to capital. I know other institutions I've talked to, it's more. So that's a way to create a buffer even beyond what that 9% is.
Yeah, I think, taking off on Tom's comments, if you exclude that excess liquidity as defined by balances held at the Fed, in my case, my numbers go up by about 115 basis points, which is a big number. And if you think about CBLR at the 9% level or even at the 8% level versus a leverage ratio for well-capitalized, which is 5%, there's a pretty big disconnect and a big buffer. And so, our thought process is that we need to better align those, or if not, figure out why, in fact, there's that big difference. Even at 7.5%, that's 150% of the Tier 1 capital ratio to be considered to be well capitalized. So I think it's a useful tool. We don't use it. I think something like 41% of the banks that are in the country that are eligible to use it. Only 26% of banks over $1 billion utilize the CBLR framework?
Yeah, I'm Mark Schifferdecker. I'm from GN Bank in Kansas, and we're a $1 billion privately held, family-owned bank, and we do also, like Kathy, use the CBLR. But we still go back and just test and see where we are against the risk-based capital. So I went back and looked in June 30th. Our CBLR minimum capital rate was $23 million more, or 35% more than total risk-based capital minimum requirement. And I think about that for a bank our size, that's 1/4 of our capital. So it's so punitive. I know Governor Bowman has said that, you know, the CBLR is very underachieved, and I think that's exactly right because it's so punitive. You know, if I could take that $23 million of capital, leverage that up 12.5 times, and loan out 80% of it, that's about $200 million. Not that I would do that, but that's the kind of capacity that's holding back in a bank our size using the CBLR rules.
So a question for those who have adopted CBLR, has it reduced the paperwork involved with actually computing capital ratios to any material degree?
We did a quick study, and I apologize. My name is Jim Vaccaro. I'm the CEO of Manasquan Bank. It's a $3.4 billion mutual bank, born in 1874, so we've been around a while. I went to my accounting department and said, how long does it take you on a quarterly basis to calculate the risk-based capital versus CBLR? Somewhere between 3 and 5 hours a quarter. So it's not punitive in any fashion.
Yeah, I'd echo that, using it. That's one of the reasons why we had a lot of capital, and I estimated originally it was taking 5 or 6 hours a quarter, which isn't a lot, but we're always looking for efficiency. But we still calculated, and I would say it's about 2 hours a quarter in our going through Schedule RCR. So
you're more efficient than we are.
Well, of course, yeah. But we have not achieved the efficiency. I mean, it's great. It's easy to complete that. And I would echo what Thomas said. Just some real, easy tweaks. I mean, number one, the 9% bright line is very, very punitive. And I know Governor Bowman and others have talked about lower, for statutory levels, it's between, I think, 8 and 10%. So you can lower that down, whether 8% is the right number or something less. But also these low-risk, non-risk assets, investments in Treasury securities, cash at the Fed, those would be quick, and even the smallest community bank, I mean, that wouldn't be a full-blown risk-based capital calculation, but you can do that on the back of an envelope pretty quickly, and that would not really substantially add to the complexity of calculating your CBLR.
Let me move this conversation in a slightly different direction and pass the mic down to Greg to talk about risk weightings, because I know it's a subject you've thought a great deal about.
Absolutely.
And not all risk is created the same.
Well, thank you. And I'll just comment quickly on the CBLR. So Greg Hayes, I'm the president and CEO of Kish Bank. We are a $1.8 billion community bank based in central Pennsylvania. I like to say we serve everyone from the Penn State student to the Amish, which is a broad dichotomy, especially based on some of the technology conversations we've been having today. For us, we are publicly traded, so we are traded on the OTCQX market, which means we have to look a little differently than my peer panelists here that are either mutuals or privately held. We've got to manage capital very efficiently to be able to produce the kind of return for our shareholders that's effective. There was some talk in the previous panel about earnings and how earnings can help a lot, and maybe earnings should be considered in how you look at capital ratios. For us, it's credit quality. Our earnings are pretty strong, but we manage a very high quality portfolio as a community bank, knowing our customers very well, knowing every deal, looking at every deal. There's only a certain amount of earnings you can get when your credit quality is that strong, and your earnings are what in a publicly traded bank I've got to pay, a dividend, at least if I want to keep shareholders happy, and grow capital as well. And so to support the loan demand of our communities, when we look at CBLR, it is restrictive. I think leverage ratios are meant to be a backstop, and not necessarily that binding constraint that holds us back from growing. And I think the ability for us to manage capital efficiently through a high-quality loan portfolio is really what drives our capacity to support our communities. And so for us, we look at the the ability to look at risk weightings and risk weight our entire balance sheet in a way that puts every ounce of capital to use in the best way possible. We recently took a portfolio of commercial real estate loans that we have, and we said, okay, you know, you look at every nuance of the guidance and the regulation that's out there, and you say, these loans that have this debt service coverage ratio and perform at or have a loan to value below this amount, we can drop those from 100% risk weighting to 50% risk weighting. Well, you know, that freed up $1.5 million in capital or $15 million in lending capacity because we have the ability to look at those risk weightings in a very discrete way. That said, it's extremely complicated, and there are opportunities within risk weightings. When you think about loans to individuals who own their house, it is their primary residence, and you think about the 50% risk weighting, maybe there's opportunities to look at that differently. I understand construction, tract lending, how do you manage based on risk? As well as commercial real estate where it's owner occupied. I think there are opportunities for us to look at the risk weightings as well to help institutions who manage a very high quality loan portfolio put that capital to work in their communities in the form of lending.
Well, that really goes back to tailoring and indexing, that if we could get to the point of tailoring and indexing, then we would know where our capital ratios needed to be.
You know, I think intuitively we know where they should be. And so you don't manage necessarily to that capital ratio. You manage to the market demands that you have for both your depositors and your borrowers, and then you look at your capital to make sure it's adequate and well capitalized in every single respect. But the driver should be the business opportunity and making sure that we have enough. And we talked a little bit about diversification and concentrations and the like, a lot of which came out of the 2008 banking crisis when the world ended. And are those kinds of guidance and concentrations still applicable, or did underwriting change dramatically from collateral-based to cash flow-based? And I think those changes have not yet been reflected in the capital regulatory guidance.
I think it's interesting. I've been in banking since 1968. I won't calculate how many years that is, but it's a couple. So I've seen pretty much every crisis that has occurred since that time. I don't believe that there has been a credit crisis over that time period that has ever repeated. So fixing what happened last cycle is no guarantee that we are prepared for the next cycle. And I think that's one of the challenges that we have as an industry. It's one of the challenges that the regulators have, and I think it is one of those question marks. As much as I am excited about the idea of tailoring regulation to understanding the nature of the business, the challenge will be there still has to be some quantitative standard against which you're still trying to equate the risk of the business with the amount of oversight and capital and liquidity that's required by institution. And I think the challenge I see sitting on 4 bank boards myself, that there is a great deal of difference between how examiners in one district look at something versus examiners in another district. And we were talking earlier that's true even within different exam teams, Greg.
I would just add to the complexity of it, but also to Kathy's comment about indexing. You know, when we think about what a $500 million bank was 10 years ago versus what it is today, or us as a $1.8 billion bank, 10 years ago versus where we are today, it's a different set. And indexing, getting to the right starting point today and then moving forward, inflation probably isn't the best way to index. And I know, I appreciate Secretary Bessett's comments, but GDP growth really is when you think about the economy, how banks and the value of what we're providing to our communities expands. And our growth in GDP is, we think, an excellent way to consider indexing as we go forward.
Yeah, some of the last panel, I think they were asked if there was one thing you could change. And I think for our bank, as community bank, indexing would be very high on the list, because it's held us back, and it's just micro-managed the risks that we can take and the expansion we can have. And so if there's one single thing, and I know Governor Bowman and others have proposals for indexing. I think the ABA's been working on that as well. But I think that'd be a game changer for community banks.
Just to comment on how thinking has changed, the legislation for the Genius Act, and I know we're talking about capital, had a financial requirement level for the reporting of reporting financials. It was set at $50 billion. I crossed $1 billion and I had to comply with FDICA compliance. But yet a stablecoin issuer is looking at a $50 billion threshold. So that's the threshold mindset in new legislation today. There's got to be better parity.
I agree with that, Greg. I see it at the 10 billion threshold as banks queue up to go over that 10 billion threshold. And as a public company, about the only way you could successfully do that is to make an acquisition that carries you several $1 billion over that, because the expenses involved are extraordinary. And to do that without being able to absorb a lot of that expense through merger accounting is pretty difficult. So you have built in something to the structure of how we operate that requires consolidation of the industry, which is not exactly what our objective is. So
There's another dynamic, and that is the consolidated capital requirements at $3 billion and greater, which disadvantage the holding company level when you get to that number. And again, we're talking about thresholds and what are the appropriate applicable thresholds in today's environment. I think that's need to be relooked at. Tom has been a champion of the mutual banking industry and working very diligently with a lot of legislative effort also on the mutual capital certificate. So,
yeah, I'd be glad to talk about that briefly. And thinking about the small bank policy statement, something in excess of $3 billion for holding companies, whether they're mutual or not mutual, very, very important. So, Jim, I'm glad you brought that up. Just briefly on mutuals, we're a subset of the banking industry. We talked about the diverse and very banking system we have. Mutuals play a big role in it. We're about 10% of the charters, about 430 charters that remain, and we complement and fill in the gaps where other banks don't all the time. Conservatively managed generally and owned by the community. So we don't have outside shareholders. Traditionally, our only access to capital has been either retained earnings, and for those of us that have holding companies, subordinated debt. And subordinated debt can count as Tier 1 capital, but it's transient, fleeting, and not a sturdy foundation for long-term growth. So we have the same capital needs that all banks do for growth, for innovation, de novo formation. Very excited that 3 years ago we had the first de novo mutual form in the country in New Hampshire. Needed for capital planning, acquisition, and accounting, offsetting, taking the edge off of a fair value mark, and for general risk management purposes. But for 50 years, mutual banks got disconnected from the capital markets. It's legal, it's permissible, and it's not the blame of anyone. It's just the trends and different capital schemes as they formed and evolved. But I'm excited that in the last couple of years, we've dusted off provisions. It's legal, like I mentioned, it's legally permissible, and we've had 3 capital raises. So one of our 5 banks is a minority depository institution. It successfully completed a $5 million capital raise. But there was a consequence in doing it, and it took the entity in New Hampshire that formed, it took one of our subsidiaries, and another one somewhere between 12 and 24 months to get approval to do it for something that's legal and permissible. And no complaining about it. We're in uncharted territory, or territory that hadn't been visited in half a century. But there's a real opportunity here, and we appreciate some of the dialogue we've had with the Federal Reserve and other regulators for the three regulators to standardize and clarify what the pre-approval criteria are, so that we can be pre-approved, that we can go to the market in 2 weeks, a month, without having to go through spending $500,000 on legal fees to raise $5 million in capital, and to generally have predictable outcomes. And I think in any capital solution we come up with today, or liquidity solution, standardization, clarity, pre-approval for low-risk actions, and predictable outcomes is an important outcome. And then finally, for the mutuals in the room, and there are several of us here today, to have that being part of our capital plan and accepted by regulators. I think if we can achieve those objectives of standardization, pre-approval, predictable outcomes, and it being regulatorily acceptable in a coordinated way among all agencies, that's a win. So.
I want to now take a step back and look at how I think about capital adequacy. I think the numerical number of capital that a bank has, measured however it's measured, is certainly one indicator of stability in the bank and its ability to be safe and sound. But a comment was made earlier, which I agree completely on, which is the profitability of the bank and the source of that profitability is perhaps more important than the level of the capital. If you're earning 150 basis points on assets, you can replace a lot of capital that is lost through the deterioration in asset quality. And then I think the third leg to this stool is liquidity. And I'd like to now pivot to that discussion. The events of 2.5 years ago, to me, were absolutely frightening. Like I said, I've been in the business for 57 years. I do not recall ever having seen a deposit run. And you can ask yourself why. You know, why did this occur? I mean, if Silicon Valley actually raised $1 billion of equity the year before, was it really an equity issue? Having been very close to that with one of my banks that I'm involved with, social media played a huge role in that. And so as we think about liquidity and how should we be managing liquidity on a go-forward basis, I'll throw that out as an important regulatory issue, which is the ability of the bank to monitor social media. I realized the run that we had were isolated to large banks on the East and West Coast and not the middle part of the country. But that does not mean that it cannot occur in the middle part of the country. So to my colleagues who are here from the middle part of the country generally, central Pennsylvania is considered Midwest, I believe.
Yeah, you could consider, you know, as we get towards Pittsburgh, we get a change in colloquialisms that call you Midwest.
So did the events of 2.5 years ago change how you thought about liquidity? Greg?
Well, yeah, I'll start off. For us, we've been growing at a significant pace, and the competitiveness for deposits in the traditional community bank model has created the need for us to manage liquidity differently and manage our balance sheet differently and hedge interest rate risk with more complex balance sheet management. But liquidity, for us, it's the access to off-balance sheet liquidity that really is the tool we have. And it is a diverse set of products that are available to us that are very complementary. We and our friends from the Philadelphia Fed are here, use the Fed window every day, and we use it quite a bit, but we use it as part of our managing our duration risk. We will borrow from our FHLB friends. We will use brokered, both CDs and more liquid brokered deposits. We manage our Fed borrowings, other sources of borrowings, and it allows us to manage growth. It allows us to manage our liquidity, but we pledge all of our assets for immediate availability. It's not next day. If we had to sell a security, we'd have to wait a day or two to get that liquidity. This is immediate access to liquidity that is more than 50% of our total assets. And access to that kind of immediate liquidity allows us to manage the balance sheet. And when you think about the Fed window and the FHLB, they're very complementary, especially for us. And we're in and out of different positions because it allows us to manage interest rate risk. And if you look at our margin over the last 6 years, we have maintained a margin between 320 basis points and 340 basis points steady for 6 years in one of the most rapidly increasing rate environments we've ever seen, as well as now what we're seeing is a normalizing of that yield curve and rates, short-term rates coming down. And so we've got a great finance team. They do amazing work. We've got a great leadership team and board. We're involved, we're engaged, we're having conversations every day. We're settling sometimes twice a day because we know that liquidity is what creates the issues for banks. The answer to the question is always more capital, but it's really about liquidity. And the sophistication of how we manage that is critical.
Yeah, I think it's critically important. I also think the framework is really important to understand what happened pursuant to the 2023 events or crises or, as we heard this morning from the Secretary of Treasury, debacle. I think everybody in this room are relationship managers and relationship bankers versus transactional bankers. And what we saw in 2023 to a great degree was a function of large organizations built upon certain kinds of transactions that were subject to what I refer to as velocity risk. And community banks don't have that same kind of risk profile. And so do we look at liquidity differently? Yeah, I think there's been a redefinition of what liquidity is, not because it affected our business model, because the regulatory framework says we should look at it differently now. There was no such thing 3 years ago of a term called uninsured deposits because nobody cared, right? And now everybody says, well, I need to have either on or off balance sheet liquidity equal to some multiple of my uninsured deposits just in case. And I was reporting to our State Department of Banking twice a day in terms of liquidity. Not a great use of time in the finance area. It didn't really add any strategic value to our organization, but it's something that we need to do. Today, you know, between on and off balance sheet liquidity, and we use Federal Home Loan Bank really as a balance sheet management tool as much as anything else, and we use the federal, the FRB discount window, we would use that really as a primary liquidity vehicle. But today, between the on and off balance sheet, it's about a third of my balance sheet, over $1 billion. And that's fine when you have an inverted yield curve and short-term rates are real high. But what happens when they start moving down and you start having margin compression because of the amount of liquidity, either on or off balance sheet, that you have to maintain? And the stress test, we just talked about how important earnings are. So I think that, again, there's got to be some kind of recalibration of who we are, what the business model is, and the risk profile versus the organizations that got subject to that velocity risk in 2023.
I think to respond to Jim in the nature of the deposits of those four banks that failed, they were large commercial banks. And so they had customers that had some outsized deposits. And so from a regulatory standpoint, as we're looking at tailoring, it seems to me an important question, which would speak to, I think, what Jim was saying, is the granularity of the deposits at the bank. because the runs that occurred were not the consumers for the most part, but it was the large customers where when the government came out and said, by the way, we have banks that are too big to fail, money started to flee to JP Morgan and Bank of America and the other banks that are too large to fail. That's a problem, you know, because it's too easy for a commercial customer to say, I can't take the risk. I'm just going to move the deposits to a bank that's too big to fail. And the only thing that began to stabilize that, and I saw it firsthand, was the Fed's term lending facility. It was made very clear that the administration had no interest in stepping in to try to stop the deposit run. But thanks to the Fed and the creation of the term lending facility, it provided enough support to stop the bleeding.
And John, I'll just add, and we didn't do it out of, we didn't have any risk, and we didn't have a lot of deposit outflows during that period. The creation of the term funding program is really what opened the door for us to have a better relationship with the Federal Reserve, to have the window be something that was not only in place and tested, but was something that we began using on a more daily basis. And I know, Kathy, you had talked about how we can get more banks educated on CBLR, but also on the Fed window and how the Fed can help community banks realize it's more than a contingency tool. It can be a daily or even integrated tool to managing your liquidity.
I agree 100%. Most of the small community banks are well informed on the Federal Home Loan Bank, but the discount window, they're not, and they need that education and that understanding and how to set it up and to test it on a regular basis.
Yeah, and unfortunately, there's still a stigma, even though the Fed's tried to do that. But 20 years ago, I was thinking the Fed model was a little different. We all had Fed reps that came out to our banks, community banks, and called on us and helped explain the products and services and things like that. But the model's different now, so I still think there's, at least among small community banks, there's still a stigma about the discount window. And we're big believers in FHL Bank. They're game changers for us. But I still think the two windows are complementary to each other, as I think Greg or somebody said. And so if the Fed could do more to try to communicate, educate, and help particularly smaller community banks understand that that's not a stigma anymore. And make sure the banking regulators all understand that. I think that would be very helpful to us as community banks.
Yeah, one of the things is also, we have discrete sort of custodians of our collateral between Federal Reserve Bank and Federal Home Loan Bank. And if there's some way we can combine those and sort of create this toggle so that they can utilize that same collateral pool and communicate with each other operationally, for community banks, it would just create a lot more efficiencies.
Yeah, I need to compliment the Fed going back to the period 2.5 years ago. They were incredibly helpful. And they had people working well into the night to log in collateral so that banks could be in a position to borrow under the facility. And it did not go unnoticed by me at all. And I think, we've touched on it here, but I think the idea of having sort of maximum availability at the Fed at all times, because their charter is to support the safety and soundness of the industry. That is not the charter of the Federal Home Loan Bank. Federal Home Loan Bank, at a time of crisis, needs to protect its own balance sheet. What you found 2.5 years ago with those banks that were under attack, the Federal Home Loan Bank shut down. And then collateral need to get moved from there to the Fed. And again, the Fed was incredibly helpful in doing that. But that is the Fed's mandate. It is not the Home Loan Bank's mandate. Home Loan Bank is there really for interest rate management and sort of normal liquidity management, which all banks use and should use.
Yeah, I think it's
But let's not confuse ultimately at the moment of great crisis whether they are there as a source of liquidity. And I would say they are not. And it's because not they're bad people, it's just not their charter.
Yeah, I think the complementary nature of both is important. Can't be emphasized. I had a different experience with the Federal Home Loan Bank during the crisis, and I think some of us did too, where actually they were reaching out to say, what do you need? Are you good? So they were proactive, and yes, their mandate's a bit different in terms of housing support, affordable housing support and liquidity, but it is liquidity and it's a source of liquidity. So as long as we're prepared going into a crisis, I think that is the big lesson in terms of our liquidity management discount window. Certainly, if we can get that level of participation up among community banks, removing the stigma, that's important, but also testing all those facilities and their availability and having ample sources of liquidity in a crisis, I think was the important takeaway and the important lesson.
Yeah, I would echo Tom's comments, knowing that the Federal Home Loan Bank was there in a time of crisis and they weren't going to back off. It's very similar to the business model that we have, right? And so if a crisis, we're not going to back off. We're this continuity in the marketplace, and to have, I know in the case of Federal Home Loan Bank in New York, they did the same thing. They did very active outreach and said, whatever you need in order to get through this, if we can do something, and if we can help to create a vehicle that may be unique to you, let us know, and we're willing to talk about it.
We've also always found the Federal Home Loan Bank to be there, ready, willing to help us. And I also want to compliment the Fed on helping streamline the Fed discount borrowing process from the old wet signature, and how things have changed and been updated there has also been very helpful.
You know, I'd hate to, and don't want to change subjects too much, John, but when we're talking about liquidity, I really wanted to talk about deposit insurance reform just a little bit. There's been a lot said, a lot of things done. Of course, I heard that the Hagerty bill maybe got dropped today, perhaps, and so there's a lot of different things going on. This is a difficult subject, but I feel strongly, of course, going back to 2023, I mean, the world has changed with liquidity, and particularly for community banks and regional banks, having that deposit insurance reform. I feel so strongly personally that I'd like to see the cost. I'd really encourage the FDIC and the other regulators, but particularly FDIC, show the actuarial numbers of what does universal coverage actually really cost? What is 500 million? You know, or 500,000. What is 5 million? Whatever the number is. And I think it's hard to make a stand for deposit insurance reform until you know the cost and the benefits, and so I think that's crucial. I mean, you could make the comment, you could make the argument that Silicon Valley Bank doesn't fail if there was universal deposit insurance, and I know that's way out there, but so I would really encourage the regulators, particularly the FDIC, to crunch the numbers, and because we don't want to reform deposit insurance during the time of a crisis. We want to tackle that during a non-crisis period. So heaven forbid, if there is another crisis, we've got the mechanisms in place to help with liquidity for particularly community banks.
I would also say, when we're talking about liquidity, broker deposits, and really appreciate the work of Chairman Hill at the FDIC in kind of eliminating or working to eliminate the outdated legal construct around the perspective of the limits to liquidity management. For a lot of organizations, broker deposits are, you know exactly how much you can get, you know exactly what it costs, you know exactly how long you're going to have it, and it's not going to run. It's a contract, and so that to go out and raise $20 million in my community means I'll probably have to spend a lot on marketing. I don't know exactly how much I'll get. I don't know when I'll get it, and it also, I'll probably end up repricing a lot of my market rate deposits by doing it. And so there are many tools out there banks have for managing liquidity, and I think we need to make sure that our regulatory agencies are aligned on the perspectives and those tools that are available to us. And not issuing guidance. There's a lot of regulations we have to follow. It comes down to the guidance sometimes that really get us caught up in regulatory examination conversations that take us far afield from the risks we have and are focused more on our process. You heard some of that this morning from Secretary Bessent, and I really appreciate it, and from Governor Bowman as well. But when the FHFA guidance that was issued in the past called into question the FHLB, that can be a big issue, and there's got to be stronger alignment and more clear, direct guidance around safety and soundness risk as opposed to process. And I think there's a real opportunity as we look at whether it's CBLR or liquidity management. There's a lot we do, stress testing and model validation, significant costs. Community banks that are really the smaller community banks. I know 30 billion might be the new mark for what a community bank is, but that is a big bank compared to all of us. And so we've got to think differently about this idea of tailoring and how it is impacted through guidance that gets issued that really then sends regulators far afield in their process of examining us.
I totally agree. There's been a lot of talk about the 10 billion and going over that mark, but we can't forget the 500 million and the 1 billion mark. We're at the verge of the 500 million, and our regulators are already talking to us about when you hit 1 billion, so you need to start building those elements in between. So, I mean, there are just a number of things that need to be looked at, but all those levels of indexing and needed to be taken into consideration, and the tailoring process, and with a one-time adjustment now to get it right, and then the indexing after that, as Greg mentioned, based on GDP.
Yeah, and I want to give a shout out to the FDIC too for introducing changes to the fiducia model, which I think maybe even by the end of this year will take place. That's going to be, I mean, Kathy's at the 500, I'm at the billion. And I know the others are, at the next level, 3 billion on up. And so, thank you to the FDIC for opening that up. We've been working on that for years, and it's really nice to see that moving.
I think one of the other issues that I'd like to talk on, which is not under the control of the Fed, but one where they can exercise influence, and that is CECL. I think it is incredibly bad accounting policy, and I think in terms of safety and soundness. So somebody agrees with me? I had given testimony on this, but I was not very persuasive on the subject. The thing that bothers me most about it, there are several things that bother me about it, but in terms of a safety and soundness thing, it is pro-cyclical. So as the economy starts to deteriorate, or you see some softening, required reserves go up, which means the loans that you're booking today are marginally profitable, if profitable at all. And so you slow down your lending, which exacerbates the cycle that you're in, and you have the opposite effect when times are good. So I think it's bad from that standpoint. I think the second piece to it is an attempt to put science into determining what an appropriate level of reserve is. And then there are all these Q factors that get added to it. So at the end of the day, it's completely subjective again. It's just very expensive to give it the appearance of objectivity that it does not have. So
John,
let me climb down off that horse.
Yeah. Well, just to put a number to it, and I know we want to get to some questions and got to watch our time, but just to put a number to that, if unemployment goes up, the unemployment projections go up, it could result in us, and not a small amount, I mean, just marginally if they go up, it could result in us putting up to $1 million more into our reserve. That's $10 million of lending we could be doing. That's, it's not generating capital because it goes into the reserve instead of, now it might be thought of as capital because it's sitting in reserves, but we cannot consider it capital and we cannot lend on it. And so there might be a thought that we look at reserves a little differently with regard to how we treat capital as well. So just a comment.
It's very interesting when you look at the level of the loan loss reserve over time. It ratcheted down a level after the passage of CECL. So we have fewer reserves, which makes no sense at all. So again, an issue that I wish the regulators would weigh in on, because the accountants are dug in on this position.
Well,
So
that's because the unintended consequences of what it costs you now to validate the CECL model is ridiculous.
exactly. We've got a couple minutes left here. I thought we might throw the floor open. I'm told only to bankers in here, not Fed staff, but I might let Fed staff get a question in. So would anybody like to pose a question to my panelists here?
Hey, Joe Cassim with First Capital Bank in Charleston, South Carolina.
A very good bank, by the way.
Thank you, Mr. Hagermeyer. We're kind of in a moment where we have a short window to make lots of changes. And I hear, I think everyone in the room probably has something very near and dear to their heart. But we also know we can't do everything at once. And so I know what one or two things that I really, really want to see go through as we're trying to reshape what this world looks like. But I would like to hear from the panel, you know, if you can pick one or two things that you really want them focused in on. And I've heard it, I love the comment, I think that was Mark, about let's just see what it costs to increase the FDIC insurance. It's not like we're not paying today. All of my clients make me push them through ICS. That's anywhere from 5 to 12 bips. So I am a conservative, so this is going to sound weird, but if you need to charge me a little more on my FDIC insurance, this might wash out. So really just, we get a quick shot with our regulators and our industry to make some big changes. What are the one or two you're really thinking going to be impactful?
Great. Thank you.
I'd start with an understanding of what's achievable right now, what's in the authority of our regulators to change that do not require statutory change. Focus on that. So I talked earlier about mutual capital, clearly within the control of the three federal regulators about how it would be implemented. And then I think also in terms of tone, right now, setting the right set of expectations on future issues that might come up. So we talked a little bit about discount window access and the Federal Home Loan Bank's role, making sure that one doesn't replace the other over time, and that there's distinctions between the two, the complementary nature of it, and also an understanding by policymakers that it's not just liquidity we're talking about here, it's also interest rate risk, and that liquidity access is tied to IRR as well. So I would encourage focus on what's in our control right now and what doesn't require statutory change.
I would agree. I absolutely agree with that. I think that the regulatory framework on capital is really extraordinarily important, and it's going to drive community banking success. The other thing that I hope to see, and it's a little early yet, is that the tone that we've heard through this entire session gets translated to the field. And so what we hear now is, this is the kind of regulatory framework, and I want to make sure that when the safety and soundness examiners come into the individual institutions, their actions are reflective of the kind of tone that we're hearing today.
We've talked a lot about it, but I think the regulatory thresholds, I think that goes along with some of that's low-hanging fruit. Of course, the Durbin Amendment at $10 billion that's difficult. I understand that's going to be hard to do that. But in terms of CTRs, there's all these bright lines that are not indexed, and we were just talking about how much of a difference that makes, that scope creep that's happened. And to me, that's pretty low-hanging fruit that we can get done. And then the second thing, we brought it up again, deposit insurance reform. That's a hard one. It's going to be a hard one, but I think we can make some, whether it's a tag-like type program or just the Haggerty bill and some things like that make some dents. I think some of those things are doable in the shorter term.
And I would say the thresholds would be number one for me. And then the positive things that I've heard on building out a framework to help the smallest of community banks with education on whether it's CBLR or other things. And as new regulations, rules, guidelines, things roll out, that they're not having to deal with an 800-page guideline or however many, or pay somebody to have to come in, or that they even know or realize the effective dates of it, that we've got to hold on to our community banks and we've got to educate them, since not all of them have the resources to be able to attend conferences and get the training that's necessary there.
I'm going to be a little provocative in the context of we talk about bank regulators. I think they need to be activity regulators. The existential threat facing community banking is that, and when we saw it with mortgage banking, we used to do 80% of the mortgages in the country. We now do 16% of the mortgages in the country because mortgage bankers did not, or mortgage originators did not have the same level of regulation, CRA requirements, et cetera. We're going to see it with stablecoin, right? If the payments system moves outside of banking because there's a lack of regulation, and I know we're talking about deregulation, not more regulation, but if you're not regulating the activities of everyone that is moving money or issuing debt or the same way, if you're just focused on how you regulate banks, I think we're going to miss out on keeping community banks sustainable as a business model. And so same activity, same regulation is where I hope to see the most significant progress. I don't know if we can do that because I think we're focused on how can we help banks through the banking regulation that exists, and that's unfortunate. But legislatively, and I know we talked about staying within statutory opportunities, but legislatively, I think we've got to think about that bigger picture relative to banking and banking regulation. I agree with Jim. I think it comes down to how we examine banks, less subjectivity about how we examine process, and are you doing CTRs and BSA and AML the right way versus are you managing the risk? And I was in Washington last week and had the opportunity to meet with Chairman Hill and with folks from the Fed, and the messages sound like they're moving the right direction on really cleaning up the clarity of this is how you examine under these regulations. And if you're not talking to them about safety and soundness and true risk, why are you talking to them? So that's within banking, I think, the biggest opportunity, but we've got to think more broadly about the activity that non-banks are doing.
So I agree with that 100%. I think that if you think about it, that what we just talked about deregulation. What we need to do is lessen the delta between deregulation and unregulation, because that's our biggest risk as an industry.
Yeah. So let me wrap up our conversation on capital and liquidity with my wish. And it's not that the camels that you're all familiar with don't measure these components, but they don't look into my way of thinking at integrating safety and soundness viewed from the lens of the level of capital, the level of liquidity, and the profitability of the institution. There are subsets to each of those that I recognize and I think are important, but I do think safety and soundness is the ability to keep your doors open during all market conditions, and that requires capital that give people comfort, and obviously a loan loss reserve is part of that capital. Having the liquidity to meet flows in and out on your deposits, and a level of profitability that allows you to restore capital in the face of loss. So thank you. Thank my panelists, Kathy, Jim, Mark, Tom, Greg. We've enjoyed it. Hopefully we have given our bankers and most importantly our regulators something to think about today. So thank you.
Thank you very much. We have a 15-minute break, and we'll start again at 2:15. There's coffee and I believe desserts outside. Please, we're going to get started. All right. So we have a great discussion ahead of us, perspectives on the economy and evolving financial landscape. Thank you very much.
Thank you so much. I am honored today to be here at this incredible conference. Thank you so much, Vice Chair Bowman and team and Federal Reserve Board for hosting this. My name is Jill Castilla. I'm the president and CEO of Citizens Bank of Edmond. I'm located in suburban Oklahoma City. We're one location, $400 million community bank, women-owned, and we were founded in 1901. We also launched 2 years ago the digital military bank Roger, which has taken off and is the fastest growing military bank in the nation. I'm so excited today to meet with Stephen Schwartzman and with Blackstone. What a difference here. I put into ChatGPT, I mentioned to Mr. Schwartzman where we have overlap in our lives, and it was saying like technically not a lot of overlap, but some of the fundamentals were very, very similar as far as commitment to the community, entrepreneurship, and the mindful growth of assets. And we were talking about discipline right before we came into here. So we're just going to jump right into it because you have such extraordinary thoughts, both at a macro level as well as how community banks operate in the environment. So welcome to the Fed and welcome to our conference.
I think it'll work now. Well, it's a pleasure to be here.
It's so wonderful to be here. So I'd love to just jump right in. You are managing the largest portfolio in real estate. You have these incredible investments in AI. There's so much to talk about. But can you give us a view just overall on the economy, how things are looking for you?
I'd say with the overall economy, we have a very good look at it at Blackstone. We own 250 companies and 13,000 pieces of real estate and an enormous amount of assets, and we have about 250 billion of revenue and 700,000 people working at all these different businesses. So we're like our own database, and it makes life really easy for us because we have a real sense of what's going on. So, you saw that the last quarter was reported for the economy at 3.8%, which is really robust for a big, mature economy like the United States. A little bit of it was, I think, some pre-stocking on the tariff issue. So it'll be probably less this quarter without having any inside information about it. But our company CEOs, 90% of them think will be around this kind of growth level or better. That's pretty amazing. They're finding that probably 3 years ago, their number one concern was getting labor. Now, out of the 9 things that we survey our companies, labor is the last. It's number 9 because most of them can hire people now. We're finding that the cost of labor has gone down from about 5% a year to 3% a year. So you can feel the economy settling. Our margins, profit margins in the companies are about as good as they've ever been. So the economy is feeling pretty good, for sure. And that's reflected in the fact that stock markets are at record levels. The bond markets have gotten much better. The ability to finance things generally in the marketplaces has gotten way better. So it looks like things are lined up pretty well. And the most remarkable thing about the economy now is it's a little bit of a two-tiered economy. There's the AI economy, and then there's the real world economy. And the amount of money that's being put into the full panoply of things for AI, which are basically data centers, which are around 35% of the cost of a data center, actually building it. And the rest are the semiconductor chips and some other equipment. So these things are going at sort of 1 gigawatt, which is like a really big one, that's like $30 billion. And the amount of money that's going into these individual things is so stunning, it's powering the U.S. economy. So when people say, well, you know, we're really going to have a slowdown, if they say things like that, on top of the economy you would recognize is this engine that's consuming more electricity, the semiconductors, and you know the scale of it is like another 1% of GDP, just in the capex that wasn't there 2 years ago. So that's going to continue for a while, and it marks the U.S. economy out as a lot different than other places in the world, except maybe for China. So we are the locus in the developed world of this technology, and it should not be underestimated.
So with the normalization of labor cost, construction costs coming down, can you give us your insight on inflation kind of overall? I know during over the last few years from COVID on, whenever rents were really important to be thinking about what inflation was doing, a lot of information was kind of muddled and lagging. You have such a pulse on housing cost and other inputs into inflation. Could you talk about that a bit?
Yeah, about a year and a half ago, we started talking publicly about inflation really coming down, and we were a bit odd at that time, and the reason isn't that we're smarter than other people. We just had access to other data, and the data from being a large real estate investor is we could see what was actually happening with rents, and rents were coming down much faster than people would see, and rent is 35% of the consumer price index. So if you get rents wrong, because it's so big, that it really makes a difference. And we saw that happening about a year and a half ago. And to give you some idea, today, the way inflation is reported, I think it's something like 3.6%, 3.8%, something like that, in the numbers that is used by the Fed, and we think it's 2.1. And the reason we think that is that we see it. It is 2.1. And then that 150 basis point difference leads to roughly a 50 basis point difference in the reported CPI. And so having contemporary data as opposed to the way data is conventionally put together now by the government allows you to adjust for what's actually happening in the real market. And to give you some idea of how pro-cyclical this could end up in 2021, when inflation, we thought, was really ripping. We thought it was over 8%. The numbers that were produced by the government were somewhere around 3.6, I think it was. It's like huge difference, absolutely huge, which stopped the Fed from raising interest rates because they believed, because that was the numbers, that this all wasn't happening. But of course it was. So this can be easily corrected with just more contemporary data and a different type of formula. The numbers that the Fed were using actually become right, usually a year later. It's the way the formula works. they do get the numbers right. But in that year period, it really is a sort of handicap for decision making. The way I knew this was happening is my partner, when I started Blackstone, was for a while chairman of the Federal Reserve Bank in New York. And we could see that all of our companies at that time were getting really weak. And it was clear to me we were going into recession. And he was a good friend with Alan Greenspan. They used to play tennis together in New York. And I guess they have a meeting 4 times a year or something with the regional bank chairman. So Pete was going down for a meeting. I said, listen, tell Alan that we're in a recession and he should do something. So, Pete was a good partner, so he talked to Alan, and Alan told him we're absolutely not having a recession. And that's what Pete told me when he came back. I said, Pete, that's completely wrong. I could see it in every one of our companies. He said, well, that's what he tells me. So it took 9 months before the Fed did something. So this isn't about any group of people. It's just the preparation of that information. And once we get that changed, which I think, the Fed's very open to taking a hard look at that, it'll be an easier ride in economic cycles.
So I have to ask, did you ever get to talk to Chairman Greenspan and tell him I told you so, or?
That's not good manners.
That's great. Thank you for sharing that story. Could you talk more about where you think the direction of monetary policy should go based upon your insight into where the market is?
Well, I don't have that level of intellectual arrogance to tell the people who are doing this what they should be doing. I think we're going into a period where labor is not going to be growing very much, so there'll be some softness there, which does provide an opportunity if our numbers that I just mentioned were in the right zone, that you could be cutting interest rates further. The only offsetting factor is that there'll probably be some small inflationary impact from the tariffs on a one-time adjustment basis, which I think everybody expects. But because it's one time, you could look through that and continue a rate lowering cycle.
When you talked about labor softening, and you've talked about AI. As AI matures, could you discuss how you see labor changing over time?
Well, I think with AI, it's not just labor that's going to be changing. There are going to be lots of things changing. And when we met before, which was a fun meeting, I was saying that human intelligence for geniuses is 180 to 200, and within 5 or 6 years, most of the experts in the AI field think that AI will have the intelligence of 12,000. So 12,000 compared to 180, you're dealing with something that's so powerful that as it gets harnessed and people figure out what to do with it, is going to have enormous consequences for human beings, for the economy, for efficiency, for government deficits potentially. Because if machines can start doing things that humans were doing, and in some cases more accurately and way, way faster, that it'll have an impact on a variety of different parts of the economy, and ultimately when AI is able to basically train intelligent robots, you'll have a different manufacturing base. That's not for the next 5 years, but it's probably for the next 10 to 15. And it'll take, sort of developed world economies and make them much more competitive for manufacturing. Because assuming you can have enough money to buy that technology, you'll be able to do things at about the same cost as other places in the world, and you won't have transportation costs. You can make it all here. So if you look at how the world's going to evolve, whether it's with drug trials, and most people in this field believe that you'll be able to double or triple the amount of new drugs that get invented through the use of AI. Education is going to really change. Imagine you could individually program education for people all over the world. So you could get, theoretically, areas that are having real economic problems, and all of a sudden there people can have the ability to get absolutely first-class education just tailored to them. What's going to happen in that kind of world? The answer is something profound. So we're going to be living through some very interesting times in not just America, but around the world.
Could you talk a little bit? I'm interested to know how you're using AI, both at Blackstone as well as if you're personally using it. Is it matured enough to be of use to you right now?
In Blackstone, we're using it in a number of ways. We started off a few years ago, screening resumes using AI, and we found that for certain tasks, jobs rather, that just hiring the smartest person from the best school turned out to be a losing strategy. That the talent you needed for that particular job was different. And so we would screen for that, and that works. Because you don't need the same talent for every, type of jobs. We're using it in our investment committee memos because we can keep a file of all the old ones. We can create our own databases, and it can help you write that kind of thing a lot faster. And AI we're using in our companies. We have, besides those 250 companies, we have minority interests in other ones, and we're finding that every company faces the challenge of somebody else using AI, and you're not doing it. Because if it lowers their cost and makes them more efficient, that competitor will be able to take share or have more money to invest in new products. And so there's a requirement for all of our companies to be engaged with AI because you can't afford to make pretend you're an ostrich. That's the ostrich strategy is not successful. And even though it's early days, there are certain applications that work, but the adoption curve for AI will be sort of looking like this. And when you control assets and control companies, it's really important that if you know something's going to happen, that you make sure that the companies where you're the custodian is alert. We have the person who is handling that part of our business was the senior partner at McKinsey that was advising all these other companies how to adopt AI. So that's a part of today's business.
So, you have so many community banks that are watching online and are here in the room. Our community bank, we are a commercial real estate concentrated bank. So we're, sitting in downtown. We're lending to in our same geography. We know it very, very well. And we see you all in the market and private credit and the way that you are investing in real estate. Can we talk a little more specifically about the real estate market, where you see that going? Do you feel optimistic or concerned about what the status of it is currently?
This is real estate.
Real estate, yes.
About a year and a quarter ago, we sort of called the bottom of real estate. That turned out to be a correct judgment. We said it would be a U-shaped recovery, not a V. I would have liked a V better, but apparently I wasn't going to get one. So what's happening that's fascinating about real estate is it's very much just a simple supply and demand business, and certain categories were overbuilt, like some of the apartments. What's happened is that new construction, as you would all know in your local communities, has just dried up, for commercial buildings and new units. So they're probably down somewhere in the 65–70% range. Now, when people don't build new things and the economy continues growing, it's only a matter of time before those things go into shortage. They were in surplus, they'll go into shortage, and that's when rents really start trending up, and that's going to happen. It always happens, and before it always happens, people deep in their heart believes it's not going to happen, but it does always happen. And so it's just a question of when the lines cross. It's not necessarily going to be tomorrow, but it is going to happen. And we're already seeing some very good signs in real estate. The number of transactions is going up. The amount of financing in real estate is really going up. And the spreads are coming down. The market's valuing real estate better, in effect, as a lender than they were before. So these are the precursors of when you're going to get a turn. The only area that's really in distress was office. It's hard for me to imagine that people wanted to work from home. If I saw one more person in a sweatsuit or pajamas, or usually they were hanging their bathrobe in back of the Zoom place. I don't know why people did that. I mean, what kind of signal was that? You want to see my bathrobe, and now people have very much returned. Some places not 5 days a week like us. We were about the first back, but that's tightening the office market a bit more. Where I come from, which is New York City, we now have more people in office buildings than we did in 2019. We're the only city of scale in the United States where that's the case. So we started a year and a half ago actually buying office buildings. Things of that type will slowly happen. Some places won't come back, and the equity will be lost in those buildings. But if you pick your spots, even San Francisco, which was almost abandoned is now got a new mayor. They're doing a bunch of reforms, and their offices are doing better after really being in very bad shape. So that's what's happening in the office world.
That's great. Thank you so much for sharing your expertise and perspective on that. So I've been in this role at this bank for 16 years, and during that time period, I've seen an explosion of private credit, very sophisticated private credit, and some kind of smaller boutiques. But in some statistics I've seen is that it's actually tipped over 50% of all the credit that's being out there has been on the private credit side. You are an expert in that field, and it'd be wonderful to hear your perspective on private credit. Is that a risk to the system? And as we think about having a regulated environment in banking and more of an unregulated environment with private credit, how does that work together?
Well, apparently, private credit has become really fascinating to people. It's not actually that fascinating. Lending money isn't that fascinating. You just have to make sure you lend it to good people.
You're talking to a bunch of bankers, so.
Good people with good businesses. So what we do, we have about closing in on $500 billion of private credit. So that's, we're no longer community bankers. We keep it really simple. We keep loan to total enterprise value, senior debt, senior secured, around 40%. You have to be a really bad assessor of risks of significant size companies if you can manage to lose money on senior secured debt with 40%. I mean, you have to be really creative to lose money doing that. We do something different than you all do. We don't get our money from deposits. We have people like insurance companies who are looking for longer-term holds, and we'll raise a pool of capital. And so when we make a loan, we can make it for quite some time, and we don't syndicate the loan. We are the owner of the loan, and so we're easy to deal with, because if you just talk to one of our people, and we take it to committees, and we have a very orderly, complex process that we say yes. There's no variability on the interest rate. We tell you, here's what we'll do. We'll hold it, no roadshow, you're done. So that makes us very user-friendly. We're leveraged no more than 1-to-1. Sometimes we don't leverage that loan at all, whereas, the banking community tends to leverage through deposits, whether it's 10-to-1 or 11-to-1, or, if you're really conservative, 9-to-1. So we have low leverage to no leverage. We have matched funding, so nobody can get their money back, and we're senior secured. So what can go wrong? Not much except fraud. And I've been defrauded, I guess, 3 times in my career. I've been doing this 50 years. I haven't been doing private credit for 50 years, but every once in a while you have some unpredictable weirdo who slimes you, and you get left holding the bag. Some of these people are unbelievably clever. I mean, if you've ever been defrauded, and probably most of you someplace have, these are slick operators who are credible, and that's how you get it in a situation like that. But other than that, we have non-performing loans of like 50 basis points. Almost every bank is higher than that. So we view this as a non-controversial activity, which for some reason, some people in the media thinks that this should be an area of massive concern. We basically like to partner with banks. We're not that interested in generating our own stuff. If somebody like yourselves has a portfolio where you'd like to sell it, we love buying these things because then, you know, you can keep servicing, keep your customer, offer them more money, and we'll put up the money. It's almost like a dream, right? So it's a good thing. And sometimes with some of the regional banks, we do what's called flow agreements, where basically as they produce, we'll just regularly take it. And that's good for us because the people who give us money want that for longer periods of time.
What type of tranches, like size-wise, are you buying from community banks? Is it 20 million and up, or is that too small?
Mike, what's the answer to that?
We can be really big or really small. We're user-friendly.
All right, that's great. Well, that's good to know. Thank you. Yeah, it's been wonderful seeing the news, that the collaboration with community banks and how that they can then manage their exposure to commercial real estate by partnering with Blackstone. I think some of the discussion around private credit is that you're not the only player in that sandbox, and that others who are trying to capitalize maybe don't have as much discipline. I love your discussion about discipline and how you decide to do a deal versus, you know, at scale, you would think there maybe wouldn't be as much discipline as what you described.
You know, I just want to say, just as background, when I joined the financial industry for the second time, I was there for 6 months before I went to in the Army and business school. But when I finished business school, I joined Lehman Brothers, and somebody looked at me and they said, "You're going to cover banking." So all I knew about a bank was that I put some money as a kid, and I got interest, and then, you know, I could take the money out of the bank. That was my level of sophistication. But I ended up, you know, starting out with savings and loans and savings banks. And so I visited them all around the country. And then I graduated to commercial banks. And when I started, there were, you know, I started learning about the industry. There were 14,000 commercial banks. And I was 24, and I was going, that sounds like a lot of banks. And then I learned there were, you know, banks in every town in the United States. And sometimes, you know, there were 2 banks or 3 banks, you know, competing, and, you know, First Federal Bank or whatever. And it was very interesting to me, and I always thought that was probably a few more banks than were needed, and that there'd be a consolidation. So I found out now that there are like 4,500 banks, you know, in one working lifetime. So I don't know what the critical mass is, but I learned it's good to have local banks, because local banks can assess providing local credit. And you know the people, you socialize with the people, you know who are good people that you want to bank, want to support. And so that's like for those of us who hang around the JP Morgans and, you know, Bank Americas and Wells Fargos and, you know, the monster size institutions, which for us now are like normal size. It's really good that you all do what you do, because I think you have a better way of reaching the customer And so you provide a very valuable function, for the country.
Well, with that introduction, I'd like to have a challenge for you. And so if tomorrow we wake up and we've switched places and now you're the CEO of a $400 million community bank in Oklahoma City, I get to be the CEO of Blackstone for a minute. What are you thinking when you wake up and that you're now sitting in the lobby, you're interacting face-to-face with these customers and kind of responsible for a community and its prosperity?
Well, if we switch places, I'd have a better deal than you would. And what I'd do is I'd go out and I'd start merging with all these other banks, and I would build like a monster. That's what I would do if we switched places.
So, wow, that's a challenge. Now, I feel like I can't see you like a couple of years from now, and I'm going to be like, well, we're 450 million. That's a great. And so, what does that excite whenever you're building something that's so big in scale, like you built Blackstone, and then whenever you're thinking about leading a community bank, it's about scaling. That's invigorating and exciting for you. Can you talk about kind of the why behind that?
Well, I still think we're running a small company. I mean, I started this. I know all the people at the firm who, have important positions. I meet with each one of our businesses, which are large, but, we have everybody in the world in each of our businesses, whether it's private equity or real estate or credit or infrastructure or numerous businesses, but I meet with everyone every week. So I can look at everybody around the world. There I am. I'm at the table with the rest of you. I can tell who's alert. Nobody's allowed to drift. We keep the meetings moving. And I could tell if somebody's off, something, they just don't look right. And I'll say something to the person running that group, and they'll say, well, they had a family problem or something. And so the key to running a successful business, at least in finance, is having really firm core values that everybody understands. Openness, honesty, excellence, meritocracy, no glass ceilings. I could go on with basic principles that you would want if you were working at some place. I talk to every group of new employees, and I tell them how to be successful and that they were hired because we want them to be successful. Apparently, that's not normal in Wall Street. I don't know, I can't believe it, but people who join us say, you're so different. You want me to be successful. And you say, well, why else would we hire you? We don't want to have turnover. We want you to be great. And so you can run a business with very tight control, and very human scale, and you need a great team of people who are well trained, who believe the same things. You can't have different core values. You can have different books you read, different TV shows, different politics. None of that stuff matters. On business stuff, everybody's got to sign up for the same hard work. If you work harder, you win more, right? It's the same with sports. Teams that don't practice, they don't do so well. But you need the basic talent. I think we can, you asked me what excites me. I love doing new things. I love learning new facts because finance is a lot about a paradigm recognition. So I've found in my career there's always new facts that come up. And if the world's going well, people tend not to look at the one new fact that doesn't make sense in the context of everything working well. But that fact actually exists, and humans won't pay attention to it because why bother? Things are working well. Doesn't make sense. That's what interests me. So I keep thinking about those things and say, what does that mean? That's telling us something. What's it telling us? And I sort of keep that going, and I'm always looking for a second piece of discordant information if I can't figure it out on one. And once you get 2 points, it tends to make a straight line. And meanwhile, everybody else is doing the same thing. And then you could build a big business around that. And I get a real kick out of that. It's like seeing the open person in a basketball court, and you just get the ball to them, it goes right in. Nobody's guarding them. It's a simple concept. But we do it with data, with information. I used to call it information. And you can't get too much information. So as long as we can keep doing that and keep the scale of our individual funds, we now have 85 different strategies, and we started with one. So it sounds like a lot, but it's basically 1.5 a year, maybe 2 a year. So we don't look at that as like pushing ourselves. And you only do things that are great for customers. If a customer doesn't have a wonderful experience, it's like going to a bad restaurant where they poison you. And all of us have probably gone in our life to one really bad restaurant where we spend most of the next night not in bed. And you tend not to visit that restaurant again for at least a year or two. If you try it out the second time and the same thing happens to you, you will never, ever go back. And it's the same thing in finance. You always have to give people a good experience. And if you give them a bad one, they never forgive you. People are like elephants. They have lifetime memories for somebody who did something disappointing to them. They don't forget. And so that's why you have to be unbelievably careful when you commit capital or do anything when you're using, other people's money because they trust you. It's a lifetime of trust that can be destroyed, with one stupid decision. So it's you have to be a bit of a on your toes type of person and recognize that every time there's a capital commitment, you're betting your whole institution's reputation. And if everybody at the business, at the firm, shares that view, then people are super careful. And that's why we're the biggest in the world. We see things earlier. We have great data feeds, and we have wonderful people. When I started, nobody wanted to join us. For those of you who lend to entrepreneurs, it's not so great to be an entrepreneur unless you're really successful. And nobody's successful at the beginning. It's just always harder. You never forget those lessons. And when you can finally attract amazing...
Where you find these tickers, Sarpers?
It's
FMFSC?
a wonderful gift.
Set to gap down, halted right now.
So
Sarper is saying it's going to gap down to
I'm very happy.
$1.31.
I came here because,
I mean, look how much
all of
technical
my
support there's going to be down here.
experiences in banking over
You
the
filled all
years,
the daily
because I
gaps. That must be
graduated
bullish,
from the
right?
big ones, and I've gone through all of these crises.
You trying to dead cap bounce it?
The financial institutions.
I
and
don't
the
know.
GFC,
I really don't
was
know.
helping Hank, and the people, everybody was like making it up. Nobody knew exactly what to do, and there would be a group of us that would talk on a regular basis to say, well, why don't we try this? Why don't we try that? And so Washington, people do really important work because in those rare occasions where the system is at risk. The people here who know what to do, what the right instincts are, it guarantees the system. That's the real guarantee. Those people in those seats. So with that, you've had more than enough of me. I may want more of you, but I'm getting the hook. So thank you very much.
That was amazing. Thank you.
Thank you very much. We actually do not have a break, so if you'll just bear with us very quickly, we'll invite our next set of speakers up, and we'll get started in just a second.
the product is less the advice and more the relationship. I mean, you feel like if you're a financial advisor or a personal banker, private banker, in some ways these folks are people that you have relationships with, and I think the information and the advice itself can often be commoditized, but I think it'll be very hard to replace that feeling, and I think that's an advantage community banks have. We try as much as possible to replicate that digitally. For example, a couple months ago, we rolled out Robinhood Concierge because we noticed, at a certain point, when a customer gets so involved with Robinhood, they're using maybe 5 to 10 of our products, they have a significant amount of money with us. We want them to have a representative that they can text, they can communicate with, and when we launched that, the results were really amazing. So I think, of course, we try to do as much as we can digitally, but I think there's something that actually can't be replicated where, Coastal and many companies in this room are actually quite strong. I do think in terms of trust, there is one opportunity that we're trying to seize aggressively as a digital platform, but I think it's accessible to many of the folks in this room, and that's the family relationship. I think that if you think about trust, particularly with banking, a lot of people find out about banking through their parents, maybe grandparents. A lot of your first relationship with a bank is because, at least for me, my mom and dad came into the local branch in my neighborhood and opened up an account for me, and, they got me a debit card, which was very, very cool at the time. Every kid wants a debit card. But my impression, both as a customer and kind of as an entrepreneur in this space, is that I think the young people are kind of undervalued by a lot of the banks. It's hard to get a credit card if you're not 25 and already making a lot of money. A lot of the communication between the child, even once they turn 18, goes through the parent. And if you think about it, when someone goes to college, when they turn 18 and go to college, even if they're a community banking customer, they leave home and they go to a place where they're around other people. Those people are talking about finances all the time. I mean, we've seen a lot of growth happens with us in the college market, and I think that's an opportunity. And I don't think a lot of fintechs or banks are taking that seriously, because I think the family network is such an important one, and it's low-hanging fruit for growth as well as building trust.
I love that, and it does remind me, selfish plug, but it's tech-enabled trust, tech-enabled relationship for our community bankers that we can do both, and it actually could help us. We run a venture fund called Bank Tech Ventures that helps banks see those technologies that can meet in the middle with the consumer and what they're asking. So you mentioned it. We work with you. Can you tell them what banking products that you have? And maybe selfishly, again, why did you choose Coastal?
Yeah.
And we're extremely grateful, by the way.
Yeah. So we announced Robinhood Banking in Q1 of this year. We did an event in San Francisco where we demoed and unveiled the features. And then recently, last week, we actually did our first external rollout. So for the first time, people outside of our company, outside of our employees, were able to open accounts. And we've actually been, stepping back, I mentioned at the beginning the goal of Robinhood was to be financial super app, to not just be the place where you trade, but actually all of your finances should be handled by our software, our technology. And banking's a big part of that because your paycheck goes into your bank account, and it's sort of like the funnel through which all of your other accounts and services get funded. And we've had a few different attempts at this. We launched a Robinhood spending account, which was money transmission product state by state. We had Robinhood Cash Management, which was like our take on spending and using your brokerage account as kind of a bank account replacement. And then those didn't really hit the spot. And the reason those didn't work was primarily two reasons. One, our customer base is contrary to kind of a lot of sort of like the impressions of a lot of people. Our customers are a little bit wealthier. They're not the paycheck to paycheck customer, because by the time you are thinking about investing, your basic financial needs are typically met. Those customers tend to be credit card primary. And we kind of see that it's a one-way flow. Once you go from being a debit card primary to a credit card primary customer, you're not really going backwards. So a debit card product didn't really resonate with the vast majority of our customers. They wanted credit. The other thing is they like to have their money in different buckets. And even though sometimes we can argue it's less financially optimal to separate your money into different buckets, you should just like have them all in one place, because then you don't have to worry about moving it. You can make sure it earns the highest interest, that sort of thing. But yeah, people don't like the money that they use for core day-to-day spending to be intermixed with their retirement savings or their long-term investments. And so having it be part of your brokerage account just like is suboptimal from that standpoint. So that led us to Robinhood Banking, and the inspiration for Robinhood Banking was private banking accessible to everyone. So what are the things that a high net worth individual would get from a private bank? And can we actually replicate that experience, both in terms of products and product quality and service, with a digital form factor? And when we started thinking about this, we got excited because it's something we would use and our customers would use. It's also quite differentiated. Like, I don't think any of the fintechs are taking this angle in quite the same way. You know, most of them are targeting paycheck to paycheck customer because they, from a business strategy standpoint, they view that customer as underserved, and it's sort of like the canonical strategy would be it's easier to handle the underserved customers and kind of go up market from there. And you could argue the high net worth individual is a highly served customer, the most in demand. And so this is like a high degree of difficulty path. But I think that's what makes it interesting. And so banking, if you look at all of the features, they have this thing in common, which is differentiation is things that you would expect a high net worth individual to get. And then the challenge we have is, how do we make this available to the mass market? And I'm pulling out, I actually have something to demonstrate here. This is the first product we launched in partnership with Coastal Community Bank, the Robinhood Gold credit card. So this one is actually solid gold. When I came into this building a couple hours ago, the first question was, where's the gold? I was told there is none, so I brought some. This might be the most gold in the building. But anyway, it's not just the appearance of the card. 3% cash back on all categories with very few caveats. We had to add some caveats because we saw abuse. For example, people were paying their taxes with it and all that sort of thing. But yeah, we recently announced a couple weeks ago crossing 400,000 card holders. The wait list for this card was north of 3 million. Which I think is among the highest, if not the highest, for any credit card product. But you can see the idea, hopefully. It's just a card that would be very, very difficult to get unless you're a high net worth individual and sort of like the cream of the crop at a normal bank. And that extends to the retail banking offering too. We have cash delivery, which is a controversial feature. Nobody has really done that before. But, you know, I'm a high net worth individual. I had access to this feature. I had First Republic Bank, and, you know, there was a big truck that would bring cash to my house. And you know, it was a very nice feature. You don't have to go to the ATM. And then we asked ourselves, what would that look like if we just democratized it? And obviously not everyone needs the big truck, but you know, you get your food delivered by DoorDash. The cars take you on demand to, you know, your friend's house. So why can't the cash come to you? And so early results are good, but yeah, we'll see. We'll have lots of challenges scaling it, but it's sort of that thread of how can we make it with no compromises, make it as efficient as possible, digitally delivered. And I think when we pulled on that string, we pretty much got the product roadmap for it.
And what you'll start to see more and more from Vlad and Robinhood is the discipline and the math, the engineer in him, in how they run their company. They're constantly testing, rolling out, getting feedback. I forget the term you use for that interactive session, but you're always asking your customers and you're looking at the data to say, okay, who's using it, why are they using it, and how can we be better? It's something we can all learn to do, is talk with our customers more. How often do you actually sit down and listen to your customers, and how much does that kind of point you in the right direction for new product services, deliveries, et cetera?
I try to do that regularly. So there's a couple of things that I think you probably feel this as well, I'm sure. As the organization gets bigger, it can be, if you're not careful, you can get separated as the CEO from the people that are actually doing the work. I mean, there's a tendency to be talking to the SVPs or the C-suite and get all of your information that way. But I think there's no substitute from going to the other end of the org chart and either talking to the individual contributors on the engineering side or to customers directly. So I try to do user research myself. So and we have structured UX research. We have a team that does a great job with that. And I try to do that at least once a quarter. And I try to do customer support as well, like actually sitting down, taking tickets on the phone or on chat, competing with our AI, because we also have AI that's doing these things. And I try to do that whenever I visit our support offices, which is at least once per year per office. So, and actually we try to innovate there too. I mean, there's all kinds of AI tools that make these things easier, even user research, like new tools where, you know, you can have a chat bot having a live interactive conversation with your customers while they're using the product. So we try to stay at the frontier of that as well. And, you know, I think like how we make these products is probably a little bit more differentiated than the product itself. Like, you know, it's in some ways easy to come up with these ideas, but the factory, the machine that like makes these products at high velocity and high quality multiple times per year, I think that's what's actually hard. And, you know, we try to refine that constantly.
I'm sure you're going to get an AI question in the end, but let's go to crypto and blockchain. What are you guys working on right now? And then we can segue into tokenization, if at all. But go ahead.
Yeah, I think that the criticism that a lot of people have had about crypto for a long time, and I think it's a fair criticism, is that it's not. Perhaps it's not as real as it should be. And you know, you're trading these tokens, and most of them are memes that aren't backed by anything with fundamental utility. That's the criticism that we hear. And I think part of that is downstream of the regulatory posture that the US has taken over the past few years. Like we have perfect, well, I shouldn't say perfect, close to perfect regulatory clarity that meme coins are not securities. But if you have something that resembles a security, it's basically disallowed, right? So you can't connect it to crypto technology. So to some extent, the market that's developed in the US is downstream of that regulatory posture, which is now changing. And our solution, I think the technology is super valuable, and we think Robinhood can play a role in bringing the technology to assets that have fundamental utility. And that's why our big efforts here are around tokenization. So tokenization refers to taking a real asset and making it divisible and tradable using blockchain technology. And this is not yet possible in the US, or at least for assets that retail investors want to trade, but it's possible in Europe. So in Europe, a few months ago, we launched stock tokens, which are tokenized versions of US stocks, where we had now up to about 500 of the most popular liquid names available to retail investors in tokenized form. And we're going to build that up and keep advancing it. I mean, what we announced was phase 1, and it culminates in these stocks being freely transferable on DeFi, on blockchains, where the possibilities really start to multiply. We also demonstrated the power of the technology in trading normally illiquid assets, and that was through a giveaway of OpenAI and SpaceX stock tokens. So to my knowledge, we were the first to do that. We were the first to tokenize OpenAI and SpaceX. And I'm not sure there's a Guinness Book of World Records for that, but I think there should be. And you know, that just demonstrates the actual power of the technology. You can actually tap into the gigantic global liquidity of the crypto markets and make any real world asset, even something as challenging as a private stock, instantly tradable 24/7 around the world. And I think that's a very powerful thing.
So we have my peers here, bank CEOs from all over the country that bleed the blood of this country, and they love their communities. This is hard.
Yep.
Can you give them 2 cents on how to get started? What should they be looking at? What is the first step for a community bank?
For crypto.
Crypto tokenization,
Yeah.
you know, maybe start basics.
How
for
many,
me in particular.
Okay, how many of you guys have heard or are interested in stablecoin? Okay, stablecoin, I'm guessing, is like the big topic. How many of you are nervous about stablecoin? And okay, so we have a couple of people. How many see no value in stablecoins and are at least questioning the value for your customers?
All right, good talk. You're okay. You're allowed to say it. What's the use case is what I hear. What's the use case?
Yeah, so this is interesting. I have many thoughts, and I'm curious actually to hear your thoughts because you're probably living and breathing this. And you guys heard from Chad from Paxos earlier, who I think was the interviewer, but actually Chad is our partner on USDG, the Dollar Global Network, which is a stablecoin that we're working on. So, use case for stablecoins. Robinhood actually uses stablecoins in our business as a business customer. And for us, the big thing is being able to move money on weekends, round the clock. So we have this product, crypto trading, that we offer to our customers. And in order to facilitate a crypto trade, we have to actually settle with market makers and other counterparties that provide the liquidity to us. Now, what happens when that trade, there's trading activity on a weekend, right? And there's been lots of times where crypto markets can be super volatile and the volume can dramatically increase up to 10x in a single week. And if that falls on a weekend, we have a couple of options for how to settle with counterparties because we can't move money the traditional way over weekends. There's no ACHs or wires, right? We either have to have huge lines of credit with our counterparties, which are expensive. We have to store our corporate cash there, and the more counterparties you have, they all use different banks. It becomes challenging, right? Because you have to give yourself a buffer, and you know that can add to quite a high cash need. So this becomes expensive. Or you can shut down counterparties, and worst case scenario, you run out of buffer, run out of money at these banks. You have to shut down trading, which customers really don't like. So stablecoin, great solution because it doesn't matter what bank they have. If you settle in stable coins 24/7, real time, on weekends, and if you can convince your counterparties, most of which are fairly technology savvy, to take stable coins, it sort of like solves the problem. And so over time, we've been building up a larger and larger stablecoin position just to do these types of settlements. So there is real value in the 24/7 aspect of this, which gets to my prediction. I think that right now, at least, the value proposition for a retail customer to hold dollars in stablecoin form is not really quite there in the US. You guys are providing FDIC insurance to customers. That's a high value proposition. You can get interest. So like money sitting in stablecoin form, not super attractive or differentiated. But as a funding rail, as a way to send money back and forth, there is a ton of value. So I think stablecoin could compete more with RTP, RFP, and these instant payment rails, more so than an actual deposit sink. And I think that's the domestic opportunity. Internationally, it's a different story. And I think maybe you guys should think about it a little bit differently internationally, because a lot of folks have difficulty getting access to US dollars outside the US. And that's why you see stablecoin adoption skyrocketing, typically in countries where the population is hungry to get access to US dollars. Maybe they already have crypto accounts, and where the local currency might be inflating at a high rate. So you've seen huge adoption in places like Turkey, El Salvador, right? And I think that's interesting because those people have no other options. A lot of the banks aren't serving those markets, and it's sort of replaced the American Express traveler's check, which up until fairly recently was kind of the next best alternative. So yeah, I think there's an opportunity to embrace this business and get net new international customers as a result of it, for those that can figure out how to navigate it.
I love it. I want to switch topics just ever so slightly. There are a lot of myths or preconceived notions about who uses Robinhood, and you briefly touched on it earlier. Is there a generational difference? Because we heard earlier, younger people are going to be the first to adopt it, and you got to get in now because 10 years from now, that wealth transfer that you were alluding to earlier, or are you banking all of the generations?
Yeah, man, that's a great question. And one thing we're really trying hard to avoid is being a generational company. Because in some sense, our predecessors, the discount brokers, are generational companies. You think about Schwab and how they cut their teeth serving the baby boomers, or E-Trade, which is very much like Gen X, right? And Robinhood, when we got started, we were considered a millennial company, right? Because the millennials were the youngest at the time. And I think we have to be really careful to make sure we're always paying attention to the younger generation, because you don't want to eventually be stuck servicing customers that are getting older and might not be around forever. So we're thinking really hard about how to do that. It starts with talking to your customers, but I think it's also how do we make your brokerage account and your bank account work better when your whole family is on it. I think the family, again, is a very, very important vector that nobody's really paying much close attention to. And hopefully you've seen with our credit card and our banking product, it's very much family first. Like, we want to make it really easy to get your spouse, your partner, your nannies, if you have them, and your children on the platform. And of course, I think there's differences in how young people think about technology. Like, younger people are more digitally savvy. They're more comfortable doing everything on the smartphone. They view bank branch office access as a luxury and a nice to have rather than a necessity. But I think at the end of the day, so I think we have to be abreast of those trends. But at the end of the day, everyone wants the best possible experience at the lowest cost. And so it's extremely competitive to deliver that. And I think community banks, such as many in this room, have inherent advantages, right? And if you partner with technology firms who care about user experience and are digital first, you can create something where the customer basically doesn't have to make any compromises. And I think that's a really interesting opportunity.
Well, I'm going to ask one more question, then we'll open Q&A as we get closer. I mentioned the math thing earlier. I was fascinated by this. What is this harmonic mathematical superintelligence company you're building?
Oh, yeah.
That.
That's a fun one. So I started another company that I'm chairman of, so not in an operating role. And going back a little bit to my roots as a mathematics PhD student, we made this observation that AI models can make mistakes even solving basic math problems, right? I don't know how many times, maybe you guys have seen these examples of like, they can't really subtract properly. They make mistakes with subtraction. And yet, you know, they have access to all of this knowledge. They can synthesize information really, really well. And conceptually, they can be quite creative, which are qualities that are really good for mathematics. So the idea with Harmonic is, can we actually put these two things together and build something that verifies all pieces of output, can still be creative, but you can like trust the mathematics it produces. And of course, we're also extending it. Mathematics is so foundational that it's not just about, you know, solving geometry problems, although that's very cool. Computer software is based on mathematics. So if we figure this out, and we've recently started productionizing it and offering this as an API to companies and mathematicians, once you have this foundation of reliable, hallucination-free output, you can write computer software that's verified and doesn't make mistakes. And that's a huge opportunity. And particularly in financial services, where the consequences of like your accounting system getting something wrong or our trading system making errant trades can be catastrophic. So we think in the future, all software will be verified, particularly because more and more software is going to be generated by AI, and it's impossible for humans to be. It's impossible and also not very much fun if you're a top software engineer to be poring over thousands of pages of AI-generated computer code and verifying its correctness.
I love it. I do want to sneak in one more topic, predictive markets.
Yes.
And because Polymarket came out today with a big capital raise and a very big value. I know you are an industry leader in this, and first one over the wall sometimes gets, you know, an arrow or two, but how are you in that, and why did you get into that, and where are you at with it?
Yeah, we've been interested in...
Explain it, too, for everybody.
Yeah, so many people, actually one of the criticisms I get is, it's just gambling. Why don't you call it gambling? It's just people are betting on things. So I'm not going to try to refute that. But what I'll tell you is prediction markets, I think, is an interesting new innovation. So what it is you can trade on the outcome of a real event. Our first prediction market that we rolled out almost exactly a year ago was the presidential election. So you could trade on the outcome of the presidential election. And you might have first heard prediction markets in the news because they were being juxtaposed against polls. Like the polls were pretty far off, but the prediction markets gave you a real-time view of what was likely going to happen. And they basically called the election with high confidence long before the news networks actually called the election. So traders can speculate on the outcome of events, and it started with politics, but now sports and economics. So we have prediction markets on Fed rate decisions and inflation numbers, which are actually quite popular. And in addition to being a useful asset for traders to trade 24/7, it's a good source of information. So we have all these people that don't necessarily want to trade it, but they want to know, what's the Fed likely to do? Oh, 75% chance of a 25 basis point rate cut. That's useful. And for the traders, I think it lets you very precisely take a point of view that you have about what might drive the market or a stock and execute that point of view. So for example, on the election's a great example. If you had a point of view that Trump was going to win the election, in the past, you would have had to execute that in the form of a trade by maybe buying SPY or buying crypto. But the effect can be unpredictable. It's sort of like the connection between company earnings and stock price. Sometimes you have a company that beats earnings, the stock goes down. So if you had a point of view that the company will beat earnings, the stock might not be the best mechanism. But this allows you to very surgically, as a trader, trade your point of view, which I think has made it exciting for traders. Yeah, and me personally, I think I call them truth machines. There's so much misinformation out there, you don't know what to trust. Markets tend to be quite trustworthy in most cases. So yeah, we're excited to be a leader. We've really increased the diversity of the prediction markets that we offer. Just yesterday, we launched How Long Will the Government Shutdown Last, which a lot of traders care about.
What's the over-under?
20 days, 20 days. Actually, yeah, that's right, about 20 days more.
Well, this is fascinating, and I do want to honor our time commitment. So do we have time for one question, or what? We're going to sneak in one question.
Oh.
Sorry.
It's a big question.
She's nice, though. I met her. It's Wyoming. It's all good.
Well, and it's tied to Wyoming. So I appreciate that there are so many people in the room way smarter than
me, yes.
Than us, and maybe what we do every day. And you've showed that there is a use case. No one disputes there's a use case internationally for real-time trading, stable token, doesn't matter how that function is. There's an international use case. There's a Wall Street use case. But come to Wyoming and think about my bank in Wyoming. $570 million bank. I bank lots of businesses. Is there a use case for domestic, regular business trade from the people on Main Street? I mean, really, that's what I think every banker in this room wants to ask that doesn't operate on a Wall Street model. We don't trade. We don't mess in the commodities market. Do you see use case for what we do every day?
Yeah. Go ahead.
Well, I was going to answer it a little differently. He probably has a smart answer. So disregard mine by 50%.
Well, no, you should answer because I also wanted to hear your thoughts on stablecoin.
We often don't see the use case, but we want to be ready when it presents itself. And that's, I think, sometimes the hardest leap. And I'm very proud of our board that they're entrepreneurial and they're willing to spend some money to prepare for an ultimate outcome that may or may not happen, right? And that takes capital and that takes earnings. But we always need to be thinking about what could come versus what is here today or looking worse backwards. Because if we're building for what was 5 years ago and it's proven out, it's too late, he's already moved. So I would just challenge you to keep that innovative spirit, the entrepreneurial spirit, keep your options open, start researching, start investigating, learn is step one, my humble opinion.
Yeah, my take is honestly, from your position, you probably have more compelling opportunities. I think there's a lot of misinformation and hype out there. For example, a lot of people are saying, okay, this is going to be the new way people pay for stuff. I think in the US, it's going to be very, very hard to compete with the credit cards. I mean, we have a great credit card offering 3% cash back on all of your spend. It's hard to do that with a stable coin. And I don't think a lot of companies are seriously trying to disrupt that piece. Interest, even if we figure out how to pay interest in stable coins, that doesn't mean that suddenly consumers are going to rush to keep their money in stablecoin form. You don't have the FDIC insurance protection, but it's also not a dramatically better product. the interest isn't going to be higher. It's because under the hood, the assets are going to be kept in treasury bills or in some kind of bank account anyway. So, yeah, I would probably not be overly terrified and looking for consumer use cases where there are none and where you're not seeing demand. And I think there will be time. I don't think there's like a land rush opportunity in most markets. And we offer support for stable coins on our platform. We have USDC as well as a big collection. Right now, it's pretty niche. I mean, most people are still moving money in through ACH, even though it's a little bit slower and perhaps not 24/7, but we can get very, very close to the ideal experience using traditional rails.
Well, that is all the time we have. We appreciate you guys very much, and thank you for your time. And Governor Bowman will now come up. You are.
Wow. Well, hopefully we've provided you with a little bit of food for thought today. I know I've learned a lot, and I thought your questions were really fantastic. I know everyone's sort of struggling with this idea of what's next and how do we engage. Are we ready to engage, or do we have some more time? So hopefully you've at least thought a little bit more about that, and as we're thinking about how we're approaching things in the future as regulators and supervisors, we'll have an opportunity to talk with you more about what you're thinking you want to do in the future and how we can empower you to do that, or we can help you understand how to be safe and sound in engaging some of those activities. But as we wrap up today's conference, I want to thank all of our moderators and our presenters on today's panels. And of course, I want to thank our Treasury Secretary, Scott Bessent, for sharing his perspectives on our nation's community banks. So many of you have told me throughout the day how invigorating it has been and how it's really increasing your enthusiasm and sort of changing your outlook to see such engagement on these issues across the government. So it's exciting to be a part of this sort of change and approach. And all of the community bankers and state regulators around the country who have attended today's event, I see Arkansas and Mississippi are with us here in the room, but those of you joining us virtually, we're grateful to have you as well. I want to recognize our staff here at the Federal Reserve whose hard work have made today's conference possible. So if you don't mind, I'm just going to give a shout out to each one of them. But generally, I want to thank our community bank portfolio that's led by Karen Kaplan. But her team, Amanda Roberts, who's fantastic, who is our MC today. I mentioned Karen, Josh Smolovitz, Andrea Knorr, Greg Jackson, Dedrick Jeffries, Joe Timpone, Trevor Gaskins, Olawale Makunda, Hetvi Patel, Virginia Gibbs.
That pretty much sums up the meeting there. You did hear from Vlad Tenev, Robinhood CEO, into the end there, basically pumping up his stock into the end of the day, making a nice red to green reversal. So positive headlines, 3 million people waiting for their gold credit card. You can see the stock has absolutely surged. Talking about the prediction markets, all of the good stuff that has been pumping the stock recently. Overall, a really nice bounce off of the lows for the markets. QQQ barely negative on the session. Meta strong day, Amazon strong day, Nvidia strong day, Netflix good day, JP Morgan's green. Commodities today did get smoked, specifically gold, natural gas, and crude oil, all seeing the dark side today. Nevertheless, you got nat gas. I'm hoping for a gap down tomorrow, or I mean, not really a gap down, but I'm hoping for another sell day for nat gas tomorrow because it probably sets up for a little bit of a day trade. Very, very important things observed in the currency markets today, guys. Very important that we need to be taking into consideration. Looking at Robinhood, Robinhood's still squeezing to the upside. Look at this high flyer CODY, guys. That stock is just ripping into the end of the day. A few new positions taken today in the options trading group. Some lower price stocks. That's crazy. The CODY stock, Compass Diversified, if this starts to break out and get going, guys, we're going to see a big squeeze. It's a low volume name, so it can absolutely squeeze, trading a huge amount of volume today. We're already up 100% since entering our call options today on that name. And we still got lots of time. BlackBerry, this is a high risk lotto, guys, that I'm swinging into the tomorrow. I'm looking for a gap up momentum trade. Again, it's high risk. I repeat, high risk. But swinging some BlackBerry $5 calls into tomorrow on the chance that we get a little bit of a gap up. It's a long shot, but it has the momentum with it. We will see what it wants to do tomorrow. IWM, really nice bounce off of the lows. Tilray still holding the majority of its gains. Canopy growth up about 7.5. Snapchat almost battling back to the positive side. Look at Serve, guys. SERV. I mean, anyone still holding that? That was a crazy trade. I mean, we made a lot of money on this stock. Had I still held my calls, wow, that's insane. But that was a nice catalyst trade that we identified this morning. Beautiful entry on the dip. Didn't give you much time, but it gave you enough. Boom. What a crazy move. Now this one's on watch for a continuation squeeze. I wouldn't chase it here. I'd wait for maybe 2 to 3 days to pass. Hopefully it can build a bull flag pattern, but Serve has got some serious momentum, potentially breaking out of a really large weekly chart inverse head and shoulders that, you know, sends you way higher, way higher. If this pattern wants to play out, guys, on Serve, we're talking about 32 bucks, which is almost 100% increase. I mean, yikes. There's going to be a lot of volatility along the way, but that's looking pretty decent from my perspective. Nice little dip there into the end of the day for SPY. Quantum names still holding up quite well. Pepsi had a really good session today. Look at that candle on Pepsi, crazy. Coca-Cola not really participating. Ricky's final minute here. I appreciate everyone tuning in. We will do this all again tomorrow. Tomorrow is Fuck Around Friday. Zero DTE trading will be in full effect for everything. So there's going to be lots of opportunity. Lots of opportunity. Looking forward to it. Make sure you have some capital set aside. Overall, great day trading today, guys. I appreciate tuning in. Hopefully you caught Serve. Hopefully you caught some energy trades with us. And hopefully you caught that Ferrari. Appreciate the support, guys. Take care and enjoy the rest of you. Take it easy. Start first. Well, let me just double check. Are there any earnings after the bell? I think I saw a couple of earnings, right? If I stand corrected, let me see what the earnings are. You got APLD. That's right. Yeah, APLD. Thank you. Yeah. I knew there was one. That's for sure. All right. APLD, and then tomorrow, is there anything tomorrow? Nothing tomorrow. All right, guys. Take it easy. We'll see you tomorrow.